So you start with the newest one, Jan 2025, and then you do an old one. Then a new one, then an old one, then a new one, and then an old one. And you keep moving like that, right? So let's go. Number one, which of the following financial statements shows the value of a business assets? Which one of these will show the value of a business's assets?
A statement of financial position.
Correct. Also known as the balance sheet, right? It's a statement of your assets, liabilities, and capital. So there's an easy one. Trading account calculates gross profit. Profit and loss calculates net profit. Cash flow shows all the money coming in and coming out. Which of the following formulae is used to calculate take-home pay? So another name for take-home pay is your net pay. Is your pay after your deductions, right? So immediately it cannot be B or C because you can't calculate net pay by using net pay. Somebody said A. Do you all agree?
Yeah.
Yes.
Gross pay is your total pay before deductions, and then you minus the deductions. Number three, partnerships are formed for the purpose of, do you form it to combine capital?
So what purposes?
This is 2025, John. Number three, do we start partnerships to combine capital?
Yeah.
Yeah. What about to benefit from different skills and specializations?
Yeah.
And what about sharing ideas?
Yeah.
Yeah.
All three, right? Number four, which of the following features of a partnership states that the actions of one partner bind all other partners? So this was actually a new question to my knowledge. This is the first time I remember seeing this question coming. Right? And somebody says, somebody asking what was number one? Number one was D. The virtually foreign statement show the value of a business asset, statement of financial position. Number four, which of the following features of a partnership states that the actions of one partner binds all other partners, and they call that mutual agency. Right? Mutual agency means that if Isan, Nayasha, and I in a partnership, and I decide to enter a contract on behalf of the partnership, that contract will be legally binding for all of us. Because I could act as an agent representing the entire business. Isan could do the same, and Nayasha could do the same. I really hope I was pronouncing all their names properly.
Yes, sir. I'm proud.
Being a little good now. Number five. Into which of the following accounts is the difference entered when a trial balance fails to agree? What account would be? Suspense account.
Suspense.
Whenever your trial balance do agree, you put the difference in the suspense account. Number six. Which of the following represents the correct statement of financial position equation for calculating the value of assets? So it can't be A and B. What would it be?
D.
D. Assets equals liabilities plus capital. Immediately, it can be A and B because you can't use assets to calculate assets, right? Number seven, which of the following entries would not appear on the cash book? This is one of the questions that is repeated a lot. In the old questions and the new questions, this has stayed a staple.
B.
B. Goods sold on credit. Right? Payment for goods means you're spending either cash or bank. Goods bought for cash, checks received. All those will be cash and bank transactions. So the answer has to be B. Number eight. Which of the following types of partners has the indebtedness restricted to the amount of money invested in the partnership?
C.
C. Limited liability. So at first glance at this question, I was thinking A, right? But the truth is, all sleeping partners do not have to have limited liability. But limited liability partners literally have limited liability, right? It's in the name. So the answer will be C. So what they do, they would invest their money, but they would have no part to play in any decision making. So the most amount of money they could lose is the money they invested. That's why they have a limited liability. Number 9, which of the following financial obligations would normally be classified as a non-current liability?
Excuse me, sir.
Yes?
Where's that sleeping partner?
It's similar to what I described. Don't take part in the decision making, but they invest their money. It's just the only difference is they don't have to be a limited liability sleeping partner. No. So some sleeping partners have limited liability, but not all. So Nyasha and I go into business. Nyasha has all the ideas, all the plan, everything. She just needs money. I say, hey, well, I'll give you money. You do your thing. Just make sure and give me a certain percent of what I invested every year. I would be a sleeping partner. Number 9, which of the following financial obligations would normally be classified as a non-current liability?
B.
Debentures. But a debenture acts just exactly like a loan for companies, right? So companies could sell shares to raise funds. But when they sell shares, that gives the person who bought the shares part ownership. When they sell debentures is a debt, um, is debt that they issuing. So when they sell debentures, they basically now owe the person that money back with interest, regardless of if the company makes a profit or not. So Annalise buys a debenture from me. I have to pay Annalise back that money periodically with interest over a long period of time. In a partnership, which of the following is compulsory?
So that would be
D. D is the only thing that's compulsory for partnerships. Sharing of profits. You must share your profits. Number 11. In order to avoid writing numerous checks for small amounts, a firm may set up a
Petty fund.
petty cash. So standing order is an order to pay an order to the bank to pay money from your account to our next account periodically, right? But that would just be for one specific payment. But to avoid numerous checks, a small amounts, they could use a petty cash fund. So every time you need to spend a small amount of money, you just take money from the petty cash fund. Which of the following list of activities shows the correct order of stages of the accounting cycle before the final accounts?
B.
Which one?
A.
Mm-mm.
A.
B. Journalizing, posting to the ledger, and preparation of the trial balance. I have a song on my TikTok that could help you learn the format. The source documents, then journals, then ledgers, then trial balance, then your income statement, then your balance sheet. I will share the TikTok song because I ain't finna sing it right now. So I'll share it in the group. Number 13. The profit a shareholder receives for his investment is called what?
A
receive
dividend.
Dividends, right? So when you buy shares, the money you get back a percentage of the value of the shares, and you call that dividends. Number 14. The main internal users of accounting information are
Managers.
managers, right? All those other people there are external users. Number 15, which of the following accounts are nominal?
So
Not
first,
nominal, sir.
Are not nominal, sorry, thanks.
so D.
Dog, furniture, correct. So nominal are intangible. Nominal, intangible, real, tangible, Personal accounts will be people and businesses, which will be receivables and payables.
So discount allowed and
Them ones.
carriage is receivables and that one is
No,
personal.
no, because they are not persons, these are intangible. So these will be nominal.
Oh,
You can't hold discount allowed in your hand. You can hold the cash in your hand, but not the discount allowed. You can't hold carriage in words. You can't hold commission. Those are concepts. They're intangible. Furniture is tangible. I think, we're all sitting on furniture right now. I hope nobody's standing up and doing this. Number 16, a trait. Now, this here, they just real test this. Sometimes they test this 3 to 4 times in the same paper. So make sure you know this formula, please. A trader had an opening capital of 3,900. If his drawings were 900 and his closing capital is 4,860, what was his net profit?
C.
C. Right?
Said when you see,
It is
so
C. It's C. But I'm gonna show you how to do it for those who may not know, right?
so
So,
I don't know if I'll get a thing, but I'll just take away opening capital and closing capital.
okay. It works for you. Because you get
Yes,
a quick
I'll
answer.
take away the closing and opening capital and add the drawing back to get it figure.
Alright. Because opening capital, add net profit minus drawings gives you closing capital, right? They said opening capital is 3,900. We don't know what net profit is. Drawings is 900, and that gives us closing capital of 4,860. So I don't know what net profit is, but when I minus this drawings again, 4,860, right? So I'm gonna minus the drawings. 3,000 minus 900 is 900, right? It's 3,000 minus 900 is 3,000. 3,900 minus 900 is 3,000. So I would have 3,000 plus net profit is 4,860. How can I find out net profit from here?
Take away the 3,000 from 4,860.
And that is how we get C, 1,860. So you need to know this formula because they could ask you what is net profit. They could ask you what is closing capital. They could ask you what is opening capital. They could ask you what is drawings. So you need to know this formula so you can manipulate it however you need to answer whatever question they ask you. Number 17 now. Which of the following ratios describes the liquidity position of a business?
The asset test.
All those others are profitability ratios. They literally put profitability as an answer. I hope nobody put that. Number 18, they want to know what is capital at the 1st of Jan 2025. So to get capital, what's the formula?
Assets minus liabilities.
Assets minus liabilities. So we need to identify the assets. What are the assets say?
Debtors,
Debtors
inventory, non-current assets.
and non-current assets. And what will be the liabilities?
Bank overdraft, accounts payable, and loans.
So you add up all our assets, 40,000 plus 80,000 plus 130,000. And that would, no, plus 180,000, sorry. 40,000 plus 80,000 plus 180,000. And that will give us 300,000. And then we minus our liabilities, which will be 25,000 plus 35,000 plus 130,000, which would give us 190,000. And when we subtract that, we will get 110,000. So the answer will be B. Everybody was able to follow them? Everybody follow, right? Right, somebody asked if you're allowed calculators. I say I was going to do a video on this, I'll do it tomorrow. Yes, you all are allowed calculators. There's a common misconception that account students are not allowed calculators for paper 1. That is not the case. That is maths. If your invigilator tells you no calculators are allowed, which I've seen happen before, it's happened in the school that I teach in, and I had to go and talk to the invigilators. If the invigilator tells you that, kindly ask them to check the cover page of the exam script. At the bottom of the exam script, you will see it. Now, I'm going to stop sharing this for
I
1
think
second.
this slip say that we allow calculators too.
Yes, it does, but sometimes they don't read it. So if they tell you not that you can't use it, you tell them to read it, right?
Yes, sir. Sometimes they be demanding stuff.
Mm-hmm. So you just kindly show them. I'm gonna stop sharing just for a second, just to pull up, because this one didn't have the exam script on top, the cover page on top. So I'm just gonna show you all the cover page of one, just so you will see it for yourself, right? And then we'll go back to the paper. So there's the Principles of Accounts, paper one, right? 2021. The use of silent electronic calculators is allowed. So do not let them tell you otherwise. This has been, if I show you a 2002 paper now, you will see the use of calculators is allowed. This is nothing new. Don't let them tell you otherwise, right? So you could confidently ask them just to check the cover page at the bottom for them to see for themselves. Right? Because that could mess up your whole exam. If they tell you you can't use a calculator, how much time that gonna take up? And then if you calculate something wrong by accident, you know, like you could get marks for the working. It's multiple choice.
Exactly.
Yeah, so don't let them mess you up at all with that. Right. Number 19 refers to the following information, which shows a company's records in for 2024. And they want you to calculate net profit. Net profit is gross profit add what? Who knows? Gross profit add something minus,
Revenues,
right? Add revenue minus what?
expenses,
Expenses. So the gross profit here is 100,000. What's the revenue? Have any revenue?
commissions received,
Right. So revenue normally has the words received, revenue, or earned in the name to make it easy for you to spot it, right? And what will be the expenses?
Sundries and
Mm-hmm.
advertising.
Correct. Drawings is not an expense. So we're going to add this and we're going to minus 22,000 and 12,000, which is 34,000. And that will give us how much? They'll give us how much? Pressure, boy. Nobody?
50.
Oh, wanna know? Thank you. 76,000. Feeling a little good, but my brain working faster than all the calculators. Number 20, and I ain't that old yet then. They want to know which of the following figures to be posted to the trial balance. What figure is posted in the trial balance when it comes to ledgers? Here's the key. What you going to say?
so the balance brought down,
Right, the balance brought down at the end of the period, right? So if the balance carried down is 405, that means the balance brought down would be 405, right? So what will be posted to the trial balance is the balance at the end of the period, which is the 405. So that is 1/3 of the paper down. Let's continue. Number 21 refers to the information given in the following table about Ray's pet shop. And they want to know what is net profit. Find questions like this wicked, boy. They do all this calculation for 1 mark. So we're going to calculate our cost of goods sold, which will be opening stock. Well, firstly, let's put our sales. Sales is 2,500. Then we're going to calculate our cost of goods sold, which will be opening stock add purchases less closing stock, right? Opening stock is 500. Add purchases, which is 850. Less closing stock, which is 350. And that will give us our cost of goods sold, which is 1,000. If my maths is correct, 500 plus 850 is 1350. 1350 minus 350 will give you 1,000. So your sales minus your cost of goods sold will give you a gross profit. 2,500 minus the 1,000 will give you 1,500. Then we add any revenue and minus expenses. Have any revenue? You seen any revenue?
No.
No, so we just minus expenses, right? We will minus expenses. That would be the selling expense of 125 and the admin expense of 175. And we subtract that, that will give us our net profit. 1,500 minus 300 will give us 1,200. So answer would be B. So you need to know your whole income statement format. Just to get one marker. So don't feel you get away from it because it's paper one. Number 22. Somebody go crazy. It is, I agree. A wholesaler gives a 20% trade discount and a 2% cash discount. How much would the customer pay if the original amount was 700? So here's the trick in this question, right? Some people would subtract 22%. That's not how it works. The trade discount, you're giving it immediately. So as soon as you purchase the goods, you get a 20% discount. 700 by 20% is 140. 700 minus 140 is 560. So you get a discount immediately. The cash discount, you have to earn. So the cash discount will come after. And it would be based on the 560, the amount after subtracting the trade discount.
So A.
560 minus 2%, 548, 80. If you do it the other way, you will not get the same answer. All right, so make sure trade discount first, then cash discount. I'm making sure and explaining all of these things. So again, You don't focus on memorizing answers. Focus on understanding how to get the answers. '23, in which of the following accounting books would personal accounts be found?
B.
Which one?
B.
D, right? So they said books, which is supposed to be journals, right? But the reason why I know they want the answer to be D is because the same way you could find the name of it's got the ask for personal accounts one. And the journal won't have accounts. The ledgers would have accounts. And all of your personal accounts, all of them, would be in a sales ledger and a purchases ledger, also known as a receivables ledger and a payables ledger. Number 24, the purchase of motor vans on credit from Things Carrycom Motors Co. for use in business should be recorded as what? So when the assets increase, it's supposed to
So
debit, right?
debit the motor vehicle and credit
Mhm.
the bank account.
Did you spend money?
Oh no, credit. So credit things Carico Motors.
Correct. So when assets increase, they debit, right? You bought a motor van, the motor van increasing your debit. When you credit, first thing you ask yourself, did you spend money? If yes, if it came from cash, you credit cash. If it came from bank, you credit bank. If the answer is no, then you credit whoever you bought it from. Remember, it's not purchases if you're buying a fixed asset. Purchases is only used when you're buying goods for resale. 25, they want the current ratio. What's the formula for current ratio?
Assets over liabilities.
Assets over liabilities. You sure?
So
It's not good.
Current assets minus current liabilities.
Over current liabilities.
good.
You said assets over liabilities just now.
Oh,
Instead of current assets over current liabilities. Current assets minus current liabilities is your working capital. Current assets divided by current liabilities is a current ratio. So the first thing you're going to do here, identify which ones are current assets, which ones are current liabilities, which ones are current assets.
cash at bank, the closing inventory,
Mm-hmm.
and the receivables.
All right. And what will be liabilities?
Accounts payable.
Mm-hmm. So 4,000 plus 300 plus 17 is 2,000. 2,000 plus 2,000 is 4,000. So our assets is 4,000 divided by 1,000. Whatever answer you get, you put it to 1. So this will be 4 to 1.
So every time you get an answer,
You put
it
it to
have
1.
a
Mm-hmm.
one.
Mm-hmm.
But sometimes I don't see answers 3.
That is because I could just multiply this by 2 and make this 8 to 2. It will still be the same thing.
No, that know what I mean. Like instead of 2 numbers, it are 3 numbers.
3 numbers.
Yeah.
Most likely that is with a current ratio and asset ratio in 1. When you reach by it, if you reach by one, I'll show you what I mean. But the thing not come in paper two, the thing not come in paper two, not paper one, but we'll see.
So I saw a question like that in one of the papers.
Paper one?
Yeah, I can't remember which one it was.
All right, so most likely you'll see it. And you'll go through it. And I'll show you, all right?
Take you go back up, please.
So,
Okay, sir.
What if I'm mixing it up with something else? Let me see it. I'll go through Twitter. Number 26 refers to the following balances. And you want to know the total assets, so we just need to identify the assets.
Motor vehicle,
Mm-hmm.
building,
Receivable.
Mm-hmm.
receivable.
Adds up to 14,000. Number 26.
Also, nothing really different with this 2025 paper. Because plenty of these
Looking
questions.
pretty simple, right? Yeah. And looking like a lot of them repeating.
Yeah.
So hoping it carries the same thing. It's just May 2024 had a lot of new questions. Let me do it, because after this you do a old question, you do a old paper, and then we'll do May 2024, and you'll see what I mean. So I just want you to be prepared for anything now. And if this one easy, once you know your working capital, what's your formula for working capital? Easy, once you know your working capital. Sorry about that. All right, so I was saying this one is easy. Once you know your formula for working capital. What's the formula for working capital?
Assets minus liabilities.
That is for capital. Working
Current
capital.
assets minus current liabilities.
Current assets minus current liabilities. So they say the working capital is 15,500. Current assets is 16,500. How much will current liabilities have to be?
1,000.
1,000, right? 16,500 minus 1,000 will give you the 15,500.
So which one it was?
1,000.
Which letters? Oh,
Number 28 and 29. First thing they want is cost of goods available for sale. How would you calculate that?
Sales.
There's your opening stock.
Opening stock plus what?
Purchases
Plus
Hey, opening
purchases.
stock. Profit.
minus sales returns.
Sales minus sales returns is net sales.
And then you
Cost
have to
of
take
goods.
out the profit, so
Cost of
and you
goods
add
available.
50%.
Yes, sir. The cost of goods available for sale is the cost of all the goods that you had that year before you sold any. And that would be the goods you start off the year with, which is your opening inventory, add any purchases you had. Opening inventory is 8,000. Purchases is 22,000. So the cost of all the goods that are available would be 30,000. You understand?
Mhm.
It's part of your income statement format. And then to get a cost of goods sold now, what do you minus?
Closing stock.
Mm-hmm. So, listen. If I had $30,000 in goods and all, but then I end with 6,000, how much did I sell?
24,000.
24,000.
Right, the cost of goods available for sale minus the closing stock.
Good day, sir. Sorry for joining late. I was out a little later and I was supposed to join earlier. Really sorry about that, sir.
No problem. Yeah, you have plenty hours to do, so don't worry.
All right.
Number 30 is one that repeats often. Yeah, probably wasn't bad, huh? This is a balance sheet. The assets are supposed to be equal to your liabilities plus something. So both
Okay,
sides
will be
supposed to be
2,000.
equal. What is that?
So it will be 2,000.
Mm-hmm. Because both sides supposed to be equal. So this needs to be 2,000 to make both sides equal to 6,000.
So the 500 is taken that way from the 5,500.
Mm-hmm.
So I don't understand how you get 2,000 for this
All right,
one.
so both sides supposed to be equal, right? This credit side is adding up to 6,000. How much does this need to be for the debit side to add up to 6,000 as well?
Oh, I understand now.
All right.
So wait, I don't understand.
Right. So this is your balance sheet, right? This 5,500 will be a capital. And this on this side is your assets. Your assets is supposed to be equal to your liabilities plus capital, right? Your liabilities plus capital, 5,500 plus 500 is adding up to 6,000. Your assets supposed to also add up to 6,000. This is 3,000. This is 1,000, so that's 4,000. How much more needs to get 6,000?
Okay. So what was 29?
Minus your closing stock to get cost of goods sold.
Okay.
And half down. Next half to go. As Thomas purchased a machine for 3,250 from Grell & Co. Limited and paid 1,250 in cash and promises the balance in 10 days. Was the correct procedure to record this? So the machine, they purchased the machine for 3,250. So we're going to debit machine because machine is a fixed asset. Whenever you buy fixed assets, you use a fixed asset account. And if you're buying it, it means our fixed asset is increasing. And when assets increase, what do?
Debit.
Debit. So we debit in machine 3,250, because that's how much it worth. How much cash did we pay?
1250.
Is our cash increasing or decreasing?
Decreasing.
When assets decrease you,
Credit.
so we credit in cash 1,250. And they said we promised the balance in 10 days. How much is the balance?
2,000.
That means you owe Grell and Co Limited 2,000, right? And when liabilities increase, what do you do?
Credit.
So you credit Grell and Co 2,000. So the answer will be which one?
C.
C. Debit machinery, credit cash, credit Grell and Co. Number 32, they want to know the cost of goods sold again. That's opening stock plus net purchases minus closing stock. Opening inventory is 7,000 plus purchases, which is 4,000 minus closing stock, which is 3,400. So that will give us our cost of goods sold of 7,000 plus 4,000 is 11,000. 11,000 minus 3,004 is how much?
7,600.
Correct. 7,600. Number 33. 10,000 was paid to advertising, but only 7,000 was used. How much are you going to record? How much would be the prepaid? If you pay 10,000 but only use 7,000 for the year,
3,000.
3,000.
3,000 extra. 34. Which of the following is associated with private limited companies? Is the next one that comes
So
pretty
company
often.
shares are not sold publicly.
Company shares are not sold publicly. That's the public limited company. Number 35. M. Brown wishes to increase his allowance for doubtful debts from 8% to 10%. Accounts receivable at the end of the year total 10,000. Whilst the balance of the allowance for doubtful debts account at the start of the year was 800. Which of the following will be the correct entries to record provision for the year? So, any provision for doubtful debts account, you always record the change in provision. So if it increased, how much it increased by. If it decreased, how much it decreased by. So we know it used to be 800. And this year, it is 10% of 10,000. 10% of 10,000 is how much? The scratch a 0.
100.
1,000, scratch 10. So it used to be 800, now it's 1,000. How much did it change by?
200.
200. Without even having to look at what to debit and what to credit, I know the answer is A already, because A is the only one with 200. Right? But when a provision account increase, your credit. When a provision account decrease, your debit. This is for provision for doubtful debts. This is for provision for depreciation. Whenever it increases, your credit. And if it decreases, your debit. Provision increase, credit. Provision decrease, debit. Number 36, they want to know total capital expenditure. Capital expenditure is when you buy or you make lasting improvements on fixed assets. Revenue expenditure is a normal expenditure that is written off to your income statement. So what will be the total capital?
Good DC.
D, a new machine plus a new vehicle. Number 37, Karen and Gat, partners in a business, share ratios and share profits and losses in a ratio of 2-1. What is their respective share if the business makes net profit of 3,600? So to use ratios, we're going to change them into fractions. Karen's numerator will be 2.
So D.
Gat's numerator will be 1D. Let's see. And the denominators, you get them by adding both of them together. 2 plus 1 is 3. So Karen gets 2/3 of the profit. God gets 1/3 of the profit. 2/3 of 3,600 is 2,400. 1/3 of 3,600 is 1,200. So you are indeed correct. Number 38, you want to know how much insurance prepaid is? Prepaid expenses are assets. Accrued expenses are liabilities. Assets have debit balances. Liabilities have credit balances, right? So insurance prepaid will have a debit balance brought down. If the balance brought down is on the debit side, where would the balance carried down be?
On the credit side.
So this represents the insurance prepaid. This represents the insurance meant for the period, 8,100. Number 39, goods were sold on credit to John Brown. Which of the following double entries is correct?
B.
Sales is always credited. Explain this here. Pride. Pride stands for purchases written in was joint expenses. Always debit. All the other accounts, which is sales, return outwards, and revenue, always credit. So once you know your credit sales, automatically you know the next account has to be debited.
So wait, go back to that, please. Okay, thanks.
No problem. Number 40, Mr. A. Jones paid $250 in cash for repairs to machinery. This transaction is entered in the cash book and posted to the ledger. The double entry would be, if you pay in cash, you're going to debit cash or credit cash?
Credit cash.
All right. And repairs is an expense. Expenses are
So
always,
your debit expense.
right, so you debit your repairs, which is an expense, and you credit your cash. The last 20. Number 41. Miss White, a grocer, bought a computer on credit from Tan Company. In Miss White's books, which are the following journal entries will be made for this transaction?
You debit the computer and you credit the company.
Right. Correct. When they buy a fixed asset, they debit the fixed assets account. Look, they want to know closing capital. Same paper, but they're testing the same thing. You know, they're on that same formula selling you have to know. Opening capital, add net profit, minus drawings, equals closing capital. So if you add a net profit, if it's a loss, what do you think you'll do with it?
Add it.
Net profit you add, but losses, which will be the opposite, you will minus. So opening capital is 3,000. Drawings is 500. The net loss is 1,500. What's your closing capital? Tyree, correct? Amaya, correct? 3,000 minus 2,000. Anybody else? 3,000 minus 2,000.
So it's not the answer, it's not B.
The
1,000.
answer is A.
A, 1,000. Opening capital minus net loss minus drawings. 1,500 plus 500 is 2,000. So 3,000 minus the 2,000 will leave you with closing capital of 1,000. Number 43. So I did this question today. Or I did 2021 today. I did this question. Using the FIFO method, what is the value of the ending inventory? FIFO stands for
So
first
B,
in, first out. What is that?
it's B.
Correct. B is correct. First in, first out. The first set of goods to come in is the first set of goods to go out. So when they sold this 100 cans, they would take from the first set of goods first. The first set of goods is this 40 cans. So they will sell this 40, but then they need 60 more to make up the 100 that they're selling. So they'll take the remaining 60 from here. And that will leave them with 20 cans at $515 each. But then they sold 10 more cans. So when they sold 10 more cans, I had to sell at 10 from this 20. So that left with 10 cans at $515 each, which is a total of 10 by 515, 5,115. Number 44, a businessman offers a reduced amount for prompt payment for goods purchased. If the businessman is offering this, is this discount allowed or discount received?
Allowed.
Correct. But the businessman is giving it, right? If the businessman was getting it, then it would be received. This question appears a lot as well. The total credit of the bank column of a 3-column cash book is greater than the total debit. The most likely reason for this is because there was an
Overdraft.
That one has come real often. I wouldn't be surprised if it comes Tuesday, sorry. How many of
So
you,
what the other things for?
which other things?
The rest are answers.
Transaction was omitted from the debit side. If an error happened, if that happened, then it could cause the credit side to be bigger. Some figures are overstated. That could cause it to the credit side to be bigger. The correct transactions entered on the credit side, that wouldn't do anything. So B and C can make it happen, But the most likely reason that the credit side will be bigger was that there was an overdraft. You spend more money than you had in your bank account. Number 46 refers to the following information. Ash Bicycle Shop recorded the following information about its insurance expense. And they want to know how much should be recorded in insurance expense at the end of the year. Don't think of us, no, a lie. Think I've seen this question and asked differently. No, I think this is the first time I've seen this question. Besides when I did it in the first time I did this exact paper. Alright, so let's take a look at it using the T account now. So insurance company, insurance. We just said prepaid insurance is an asset which have debit balances. So the balance brought down for the prepaid insurance will be on the debit side, 250. Then the paid insurance by check, by cash. Expenses are always debited. So I'll put that on the debit side. And then the paid insurance by check. Expenses are always debited. So I'll put that on the debit side. Then they said prepaid insurance at the end of the year was 150. Prepaid insurance, as we know, would have a balance brought down on the debit side. If the balance brought down is on the debit side, where would it be? Where would the balance carried on be?
The credit side.
The balance carried down 150 on the credit side. The missing figure would be the insurance for the year. And that is the amount that will go in the income statement. So to get the missing figure, what would we do? Who could tell me?
Add up the debit side and subtract the balance carried down.
Right. So 1,000 plus 800 plus 250 minus 150, and that would give you 1,900. That answer will be B. $47. Which of the following items are not recorded in the appropriation account? Did this question this morning too.
The withdrawals and the interest on the
Interest on capital.
So the three adjustments they do in the appropriation account is add interest on drawings.
phase 1 and 3.
It's 1 and 3, correct. Minus interest on capital and minus salaries and bonuses. Right, so interest on capital is in that trio, but loan isn't and drawings isn't. Interest on drawings is, not drawings. So the answer would be B. Number 48. They said number 48 refers to the following information. Janice purchased 20 items priced at $10 each, receiving a 5% trade discount. 1 month later, she paid her bill by check, taking advantage of a 10% cash discount offer. Which are the following amounts would she have paid if she missed the discount period? So if she missed the discount period, this question was also in 2021. If she missed the discount period, she would have missed the cash discount.
So yeah, that's how the final trade discount.
Correct. Remember, the trade discount happens immediately. So she can't miss that period. Only period she can miss is the cash discount that is normally have to earn. So the total she would have paid is 20 items at $10 each. 20 by 10 is how much?
200.
200. And then she'd have received a 5% trade discount. So you would minus 5%. 5% of 200 is 10. 200 minus 10 is how much? 200 minus 10.
190.
Oh. Number 49, they have a bank statement. They want to know the balance as per bank statement, right? So let's say
Which one is that again, sir?
number 49
48.
or 48 was
Okay.
C. All right. 49. So if you can't remember that for bank statements, when you increase your credits and when you decrease your debits, let's read the transactions. A standing order. But a standing order be money you get in or payment. Remember, a standing order is an order to the bank to pay money from your account to another account periodically. So with a standing
Every
order,
money you're spending.
so you're spending, right? So that shows you that the debit side has money spending. Bank charges. Would that be money you're getting or money you're spending?
Spending.
Yeah, right. So you see both of them on the debit side, right? Right. So the money we get will be on the credit side. The money we spend will be on the debit side. So we have 60 and then we credit 90. So how much we have right now? 60 plus 90 is how much?
150.
So if you repeat that,
150. 60 plus 90 is 150.
150.
Right. And then we spend 100. So what's our balance now?
50.
50. And then we get 30. So what is our balance now?
80.
80. And then we spend 85. So what's our balance now?
-5.
-5. So you have an overdraft.
So you will credit $5.
Credit $5. So the balance as per bank statement. Remember, for the bank statement, when you get money, you credit. When you spend money, you
Debit.
debit, right? Right. You debit $5. Number 50 now. R. Stevens, a petty cashier. All of these I did in 2021. We should look at, maybe we should really look at in the recent papers. R. Stevens, a petty cashier, received a float of 350. She spends 320 out of it and requests that his float be increased to 400. If his request is granted, how much will he receive? Who could tell me?
370.
370, right? So you spend 320, so you're getting back your 320 you spent, but then after getting back the 320 you spent, you have to get 50 more to bring it to 400 now. So you're getting back 370.
So why is 370?
Right. So I'm gonna do it again. So you had 350 initially, right? You spend 320. So you have 30 now. You have to bring it back to
Oh,
350.
you add up the 350 and the 320.
Right. So they had to bring it back to 350. So they give you 320. But now you want to float to increase to 400. So they'll have to give you an additional 50 to get a float from 30 back all the way to 400. So in all they add 370. So normally they would just give you back the money you spent, which would have been the 320, and that would have bring it back to 350. But you want your float to increase to 400, which is $50 more. So instead of giving you 320 only, they'll have to give you $50 more to increase your float to 400. So they'll give you back 370 instead. That's how the answer is 370. Everybody good, right? Everybody okay?
Yes, sir.
All right. Number 51. A public limited company issued a prospectus offering the shares described in the table below for sale at par value. They want to know how much capital they raise if the shares are fully subscribed, right? 200,000 shares at $2 each. That is 400,000. 10,000 shares at $5 each. That is 50,000. 400,000 plus 50,000, 450,000. Number 52. The net profit of a firm was shown as 1,600. It was later discovered that discount received all of these stats 2021, boy. It was later discovered that discount received was undercast by 10 and purchases was understated by 36. What is the new net profit? So net profit is 1,600. Then they realized discount received was undercast. We normally add discount received because it's a revenue, right? If it was undercast, that means we did not add enough. So you have to add back that $10. You gotta add that $10 because we didn't add it before, right? Then purchases was understated by 3,600. Normally we subtract purchases. And if it was understated, that means we did not subtract enough. So you have to subtract that 36. So it'll be 1,600 plus $10 minus 36, which will give you 1,574. Number 53. Credit sales which has not been paid up must be included in the total sales figure at the end of the year. Which accounting principle justifies this?
Matching.
Matching. Also, if they had accruals, that would have worked as well, right? It was basically the same thing. You record all the income you receive and the expenses you incur in the period in which you earn them and the period in which you earn the revenue and you incur the expenses. It doesn't matter when you actually receive them or when you actually paid them. Number 54, they want to know LIFO. LIFO stands for last in, first out. The last set of goods to come in is the first set of goods to go out. So when they sell this 100 grams, they would sell from the 600 goods, because that was the last set of goods to come in. So now you have 500 remaining. And then they sell the second 100 grams. They will sell it from the 500, because again, that was the last set of goods to come in. So now you have 400 remaining. So the total value of your goods at the end of the year, your closing inventory at the end of the month will be 200 by 6, which is 1,200. And 400 by 3, which is 1,200. 1,200 plus 1,200 is 2,400. And see, they brought first in, first.
Take explain again.
No problem. So last in, first out means the last set of goods that come in is the first set of goods you're selling, right? Whatever the last set of goods to come in, that's the first set of goods you're selling when it's time to sell. So you're selling 100 grams of goods here, right? You're going to take that from the last set of goods you purchased. What was the last set of goods you purchased? What was the last set of goods you purchased?
The 100.
That's sales. What's the last set of goods you purchased?
600.
Right. So when you sell the goods, when you sell that 100, you take it out of the 600 that you just purchased. So how much grams you have remaining?
500.
500, right? Then you sell a next 100 on the 17th of April. So you're going to take it from the last set of goods you purchased again. Which one is the last set of goods you purchased?
300.
No, that's sales. Which one is the
Oh,
last set of goods you purchased?
okay. 200.
No, before that,
The 500.
the 500 are remaining. Remember, you still purchase this
Oh,
later.
okay.
So you're going to take that 100 from this 500. So
Mm-hmm.
now you have 400 remaining.
Okay.
So that was the last transaction. So the total set of goods you have remaining is the 200 from before at $6 each. And now the 400 they have remaining here, I write that better. The 400 they have remaining here at $3 each. So to get the total value, I'll take the 200 grams multiplied by $6. So it's $6 per gram. That will be $1,200. And then I have my 400 grams I have remaining here at $3 each. 400 by 3 is 1,200 again. And to get my total value of the closing inventory, I add them together. 1,200 plus 1,200 is how much?
2,400.
And that's how I get it. Alright, so just remember, when it comes to last in, first out, and you sell goods, it's coming out from the last set of goods you purchased. When it's first in, first out, and you sell goods, it's coming from the first set of goods you purchased. Number 55 refers to the following information. F. Taylor's items of payment for all his debtors is 4%, 15 days. The following debtors paid within different times as shown below. Terry, 10 days. Pearl, 18 days. Vicky, 15 days. Which debtors will receive the discount? Will Terry get the discount?
Mhm.
Yes, sir. Terry
Yep.
and Vicky will
He
get discount.
paid less than, correct. Terry paid less than 15 days, so Terry will get the discount. Vicky did paid on 15 days exact, so she barely get the discount, but she gets it. Pearl had to get the hard luck. They come too late. So that'll be 1 and 3. Last 4. How would the purchase of equipment on credit affect a firm's financial position? If you buy equipment on credit, what will happen to your assets? Will it increase or decrease? Increase because you have more equipment, right? What about your liabilities? You bought it on credit. But your liabilities increase or decrease? Increase because now you're owing for it. So the answer would be increase assets and increase liabilities. Somebody asked what is 55. 55 is B. Terry and Vicky paid within the 15 days. Pearl didn't. No discount for Pearl. Number 57 comes fairly often as well. An asset purchased for 1,000 depreciates the rate of 10% per annum using the reducing balance method. What is the book value of the asset at the beginning of the third year? So it's the reducing balance method, right? So in the first year, you will take the value of the asset, which would be 1,000 in the first year, and minus 10% from it. 10% of 1,000 is 100. 1,000 minus 100 is 900.
So
So
B.
B, correct. Year 2, the new value of the asset is 900. So it will be 10% of 900. 10% of 900 is 90. 900 minus 90 is 810. So they said what will be the value at the beginning of the third year. So you would start off year 3 with the balance being 810. Number 58 also comes really often. 57 as well. Huh? 58 comes really often. They want to know the total income tax. They said income tax rate is 25% of every dollar above $2,000 for the monthly salary. The monthly salary is $3,500. Every dollar above that will be 3,500 minus 2,000, 1,500. And now we're going to multiply that by 25%.
8.
That'll be how much? 1,500
375.
375.
So the answer is A.
Yes, the answer is definitely. Well, let's finish now the working in case there are people that don't know. Then he said overtime is 30% on overtime earned. Overtime is 800. 800 by 30%. Sorry. And that will give us
240.
how much?
240.
240. And when you add the two of them together, you'll get 615. I'll finish. Right. Yeah. The gross profit of a firm is 7,200, bad debt is 200. Insurance paid is 1,240, which includes a prepayment of 40. What is the net profit of the firm? So we have our gross profit is 7,200. Boom. Gross profit. Then you say bad debts is 200. Less bad debts. And
Plus 3.
we have close with CSI, right?
Yeah.
Right. So when you minus the insurance, we cannot include the prepayment because the prepayment is meant for the following period. So instead of minusing 1,240, we're going to minus 1,200. So it'll be 7,200 minus 200 minus 1,200, which will be 5,800 C. And number 60 now. In an effort to raise capital, a company has offered $205 debentures at $100 each, at 5% debentures, sorry, at $100 each. For 5% is an indication that the company is willing to do what? So that 5% refers to the rate of interest. 59 was C. So it indicates the interest to be paid on the debenture. So that will be C. And that's Jan 2025, paper 1. So I won't go over do it and go 2002 all the way back there, but we can do 2007. Right? See, we could apply the knowledge. See what questions we see come multiple times. All right, so the first one we did was Jan 2025. Now we're doing June 2007. Number 1, which of the following is a prime course in manufactured accounts? Which one of these would be a prime course?
Direct wages.
Direct wages.
Direct wages, correct. Right, so it's direct material, direct labor, and direct expenses. Number 2, which of the following would not appear on the cash book?
Goods sold on credit.
So you see, we doing 2007, and this came in 2025, huh? Almost 20 years later. Number 3, you can determine the true bank balance of a business when the cash book balance differs from the bank balance of the bank statement by preparing what?
A bank reconciliation statement.
Bank reconciliation statement. Very good. So that is what we do to see if what's the cause of the difference between the cash book and the bank statement balance. Control accounts are kept to assist
Locating
management
errors.
in locating errors. Very good. What you see now, lots of questions repeating. Number 5, no record was made of the $503 of goods sold to Elstoke. What kind of error is that?
Omission.
Error.
Omission.
Leave out the transaction completely. Number 6, they want to know what is gross profit, right? So you have to calculate cost of goods sold. So sales is 900. Cost of goods sold would be opening stock of 200, add purchases of 500, less closing stock of 300. 200 plus 500 is 700. 700 minus 300 is 400. So cost of goods sold is 400. Sales minus cost of goods sold will give us gross profit. How much is gross profit?
500.
Gross profit is 500. Number 7, at the beginning of the year, the capital of the business is 28,000. At the end of the year, the capital was 33,000. During the year, the owner withdrew 200 for personal use. What is your net profit? So you see here, even in 2007, they asked you this question where you need to know the formula, opening capital, add net profit, minus drawings, equals closing capital. Opening capital will be the capital at the start of the year, 28,000. In net profit, we don't know. Your drawings, they said, was 2,000. Which gives us the closing capital of 33,000. So 28,000, add something, minus 2,000 will give us 33,000. So we'll minus the 2,000. 28,000 minus 2,000 is how much? 28,000 minus 2,000.
26,000.
All right, so 26,000, add our net profit, would give us the closing capital of 33,000. How much is our net profit?
7,000.
Closing the 33,000 minus the 26,000. So you see, same formula I had to use, it's just it was different numbers.
Wait, so how you get the 7,000?
So 26,000 plus net profit will give me 33,000, right? I did algebra. I made net profit the subject of the formula. I carried 26,000 across here. So it became minus 26,000. So I had net profit. Net profit is equal to 33,000 minus 26,000. Which is how much? How much is it?
7,000.
7,000. Number 8, which of the following accounts shows how profits and losses are shared among partners?
Appropriation account.
Appropriation account. Number 9, cost of raw materials used plus direct cost will give you what? Out of all the answers,
Prime cost.
prime cost, the direct material, direct labor, and direct expenses is equal to prime cost. Number 10, the business which owns goods valued at 500 also has a van valued at 1,000. It owes $50 for goods. If it sells out at these prices, the new owner's closing capital would be, so basically you just have to add up all your assets and minus your liabilities.
1450.
1450, right? Because the 500, the goods would be an asset. 500, the van would be an asset. 1,000, so that's 1,500. And the $50 you owe would be the liability. So that would make your capital 1450. 10 down. We just did this one, and this is 2007, and we just did this in 2025, Jan. The working capital. What was the answer?
1,000.
Right. Because working capital equals current assets minus current liabilities. I mean, if since working capital is 15,500 and current assets is 16,500, yeah, then minus 1,000 to get our current liability, to get this. To which account should depreciation of office machinery be transferred? Which one?
You trading.
So trading is up to gross profit.
So the profit and loss.
Right. Trading is sales to gross profit. And profit and loss is gross profit and net profit. And everything in between.
Also ended up for depreciation and machinery or office furniture and the manufacturing.
Not office. Manufacturing is for the factory stuff. So office machinery wouldn't go in the manufacturing account because office has nothing to do with the factory. You understand? If it was depreciation of the factory machinery, that would be different. The question, is it not called the trading and profit and loss account? Yes, it is. It is called, so the income statement is also called the trading and profit and loss account. It's just that it's broken up into two parts. So the trading section is from sales to gross profit, and the profit and loss section is from gross profit to net profit. That is why they call it trading and profit and loss account. Think of it like 2 in 1. Number 13. S. Thomas, we did this. Wow. We did this one. 2007, 18 years later. S. Thomas purchased a machinery for $3,250 from Grill & Co. Limited. Same company name, everything. Paying $1,250 in cash. So in last time, we debit our machinery $3,250 because our machine increased by that amount. We credited.
And the answer is still C.
The same thing. Wow. We credit
I
cash.
don't know even switching up the answers.
Yeah,
Like the
boy.
position of the answers.
Yeah, boy. Way. And then we credit Grill & Co. The 2,000. Way. All right. So we could stick to after this one, we'll stick to the newest ones, go back. Piamos. We did this one as well. Well, I did this one recently.
Says Amos.
We know the answers, eh? Amos. His gross pay would be the 40 hours by $7 per hour. Gross pay would equal 7 by 40 is 280. Then you have to minus the income tax of 20. And then you'd have to minus the 5% security contributions. So that'll be 280 by 5%, which is 14. I did this in 2021 paper. So this will give us 246. Number 15, they want to know your total value. Wow, total value of assets, motor
I
vehicle,
am amazed, sir. They
debtors,
went back
buildings.
years ago to get these questions.
Right. I'm gonna say this recorded, and I'm gonna post this up on YouTube. CXC real easy, boy. Wait, nah, boy, you can't make up some new
Nah,
question.
sir, don't do that.
Oh, I
So you could do it for
wait for you.
2026.
CXC, you're amazing. Keep doing an amazing job.
Please
Keep
keep
up the
doing
great
it.
work. Wow. The main reason why a sole proprietor may consider joining with one or more other persons to form a partnership is that A, he can work less if many people are involved in the business. All right. B, the business will attract more customers. No. C, the business will get additional capital and management skills. Sounds way better. I didn't even think we need to read D, but let's read D. The business will be recognized by the government. Nope. So we know the answer is C. Number 17. Let's see if we get some new questions now. Wish it was so for paper to answer, if only. Number 17, the assets of a business total 3,200 and liabilities 820. What is capital? How do you calculate capital? Capital is equal to what? What's the formula?
Assets minus
Assets with
liabilities.
liabilities.
Assets minus liabilities, right? At least we're getting some new ones now. So assets is 3,200. Liabilities would be 820.
So B.
So it'll be how much? B? Correct. 3,200 minus 820 will give us 2,380. Number 19. A machine costs 6,200. It will be kept for 5 years and then sold at a scrap value of 200. The depreciation for each year using the straight line method would be, so you take the cost of the asset minus the scrap value and divided by the number of years of useful life. At least we're getting a few new ones now, man. Number of years of useful life. All right, I'll do one more old one. I'll do a new one next, then another old one. We're getting some new questions now. The cost is 6,200. The scrap value is 200. So that'll leave me at 6,000 divided by the number of years of useful life, which is 5. 6,000 divided by 5 is how much?
1,200.
1,200. Number 19. Under which of the following conditions would a trial balance still balance? So once the debit side and the credit side is equal, the trial balance will still balance, right? Number 1, a transaction was completely left out. Will the trial balance still balance? Both the debit and credit entry were overstated by the same amount. Will the trial balance still balance?
Yes, sir.
Yeah. Once the debit side and credit side equal to a balance, so those two good. The debit entry was left out. Would the trial balance, would it still balance?
No.
No. So hard luck for number 3. Number 4, both the debit and credit entry were understated by the same amount. Would it still balance?
Yeah.
Yes. So 1, 2, and 4. All right. Somebody asked me to do over number 18. All right. So the formula for the straight line method is the cost of the asset minus the scrap value divided by the number of years of useful life, right? The cost of the asset is 6,200. And the scrap value, they said the scrap value is $200. And it's going to be kept for 5 years. So the number of years of useful life is 5. 6,200 minus 200 is 6,000. 6,000 divided by 5 will give you 1,200. So that's how we got the answer to be 1,200. Hope that was helpful. Number 20. Joyce and Keller are in partnership having capital of 14,000 and 18,000 respectively before admitting a new member Wong of 10,000 into the business. Right, so number 20 I'm skipping because goodwill is no longer on your syllabus. So I'm not even going to hot up your head. Number 21, a proprietor wins a motor van valued at 10,000 and decides to use it in a business. Which of the following is the correct entry? So the business is getting a motor van. So when assets increase, what do you do?
Well,
And he's now investing into the business. So what do you credit? What do you call it when you start to
Capital.
invest something into a business? Right, capital. So you're gonna debit your motor vehicle and credit your capital. Number 22. Brown lends Williams $5,000 at an interest at 10% per annum. To which of the following accounts will the interest be credited to? Will the interest be credited in Brown's ledger? Let me make sure I read it correctly. Let's make sure I read it correctly. Mr. Brown lends Williams $5,000 at an interest at 10% per annum. To which of these following accounts will the interest be credited? In Brown's account, right? Which one? Interest receivable?
Interest receivable.
Correct.
Yes.
The interest will be owed to him. I do see that coming for your thing though. Number 23 is one that is repeat still. Raw material stock, work in progress stock, and finished goods stock are items most likely seen together on the balance sheet of a what?
Two factory.
Shoe
Right. It'll be a manufacturing company, right? Number 24, a discount which a businessman offers for prompt payment for goods purchased will be entered in his triple column cash book as he's given the discount. We did this one just now.
Discount
Discount
allowed.
allowed.
Discount allowed. Number 25. Which of the following statements indicates the correct entry in a ledger? All assets on the debit side, all liabilities on the credit side, all expenses on the credit side, all gains on the debit side. So on any ledgers with the balances for assets be on the debit side,
Yes, sir, so it might be 1 and 2.
right? So 1 and 2 are correct. Expenses are always debited, and all gains are not on the credit side, right? So it'll be 1 and 2. Sales is always credited. For example, revenue is always credited. Number 26. In a cooperative society, this one is repeat still. The daily affairs administered by. This one is repeat. And I think
A.
this in POB as well. Is actually D. The persons elected or appointed to do so. So 26 will be D. Some people in the waiting room. Right. So remember that answer, please. Persons elected or appointed to do so. Number 27, the photocopying machine valued at 5,000 is depreciated at 10% using the straight line method. What is the value of the book after 2 years? This question repeats as well. Think we did this one. What's the answer?
yeah.
4,000.
4,000, right? 10% of 5,000 is 500. It will be, once it's the straight line method, it's the same amount every year. So to lose 500 after the first year, 500 after the second year. Number 28, there's rare repeat. Mr. Abel and Mr. Blue purchased goods on credit at the value of $50 and $75 respectively from Mr. Kane. Another customer paid cash for goods amounted to $550. Mr. Kane took goods for himself amounted to $500. Which of the following represents his balance as the sales account?
675.
So
So
all
I
of
like
these
what
would
you
be
said,
sales.
changing the costumes and things.
All of these would be sales except this last one. That would be drawings. Because he took it for himself, right? They didn't even change any people's names, you know. This 18 years ago. Item 29 refers to the following table. This is the next question that I've seen before. W, X, Y, and Z are partners sharing ratios and loss, sharing profits and losses in proportion to their capital. Right? And we have the capital up here. What will be Z's share of the profits is 7,200. So to make this easy, I can divide all of these by the highest common factor, which is 100. So just take off these zeros. So it's 3 to 2 to 1 to 3. Z would be 3. And the denominator, I would add all of these numbers together. 3 plus 2 plus 1 plus 3, which is 9. So 3 over 9 multiplied by 7,200. Which is the same as 1/3 of 7,200. Which is how much?
2,400.
Correct. Second. Right, number 30. All right, this question, well, these used to repeat often. All right. They want to know cost of goods sold.
B.
So this question does repeat so much, or at least used to repeat so much, that I know that the answer is B, and I know that gross profit is A. I say how much is come, right? To get cost of goods sold, it will be opening stock, which is 9,850. Adding net purchases, which is a purchases, 52,640, minus a purchase returns, minus 762, and then minus a closing stock. Opening stock, add net purchases, minus closing stock. If we calculate that, 9,850, add 52,640, minus 762, minus 11,075, you get 50,653. So it is, so be correct with B, right? Right. And then C now 31 now, gross profit will be net sales minus cost of goods sold. So our net sales would be sales minus sales returns. So sales is 83,868 less sales returns, which is 1,570, and that will give us our net sales. 83,868 minus 1,570, you get net sales of 82,298. And then to get gross profit will be net sales minus cost of goods sold. 82,298 minus 50,653. And that will give you 31,645. Repeating question since they don't want time. Number 32 and 33 now. We did this just now, but we didn't do number 33. Number 33 seems to be an add-on to it. They want to know the balance as per bank statement. So remember, we said that for bank statements, debits are subtractions, credits are additions, right? And we checked it to make sure. Look, bank charges was on the debit side. I mean, that is money we spending. Standing order was on the debit side. We know that is money we spending. So that means the credit side is money we getting. So we said 60 plus the $90 check, we mean we have a balance of 150. Then we spend 100 for the standing order. So our balance is 150 minus 100, which is 50. Then we got $30 from a credit transfer. So that brought us to 80. And then we spent $85 on bank charges. So that left us with -5. And we said, because for the bank statement, debits are subtractions, that means this would be a debit balance. And then they want us to know, what does the bank statement balance represent? What does it represent? See, now it's a negative figure.
Overdraft.
An overdraft, correct. Number 34. Mr. Smith does not keep proper records. He began business with $10,000 in a business bank account. He uses his vehicle and building with $6,000 and $15,000 respectively. We did this question just now, or did I just do it in? I know I do that.
We didn't do it just now, but it's a repeat question.
Yeah, it's a repeat question. Cause I know I did it today. I did it in the 2021 paper. So before we calculate closing capital, we'll calculate capital. And capital is assets minus liabilities, right?
Yeah.
So we'll identify our assets, which would be the money in the bank account, the vehicle, and the building. The customers that owe him money, all those will be assets. And the liability would be the creditors that he owed. That $1,500 that he withdrew for personal use, what would that be? Drawings, right? So that wouldn't be an asset or a liability. So you add up all our assets, 10,000 plus 6,000 plus 15,000 plus 4,000. That would give us 35,000. And then we will minus liabilities, which will be the 2,000. And that will give us 33,000, right? But they asked for closing capital. And we're supposed to know the amount of times you look at the formula. This closing capital is capital add net profits minus drawings. We have no net profit here, but we have drawings. And the drawings is 1,500. So we're going to minus the drawings to give us our closing capital of 31,500. So the answer will be C. This is a question that repeats a lot. Number 35. A trader bought goods with 800 less 10% trade discount. How much did he pay for goods?
So 720.
720. 10% of 80. 800 is 80. 800 minus 80 will give you 720. Simple as that. Number 36. If a new partner pays 3,000, we skipping that because that's goodwill, not messing up all the head at all, and not on the syllabus anymore. Number 37. Which of the following best describes a trial balance? A list of balances of accounts. You will agree with that?
Yeah.
All right. A financial statement. What do you think about that? Is it the financial statement? Is it one of the final accounts?
No.
It isn't one of the final accounts?
So I don't think so because in the accounting cycle, it's they prepare trial balance and then end of their financial statements.
Mm-hmm. But it is a financial statement that you're preparing. You do think so?
Not really. Oh yeah.
Mhm.
No.
What about an account? Is it a T account?
No, sir.
No. Does it check for accuracy?
Yeah.
All right. So the financial statements will be the income statement and balance sheet. Shall stick to your guns. And it is not an account, right? So it is number 1 and number 4. Though, if you believe you're correct and I talking nonsense, you could tell me I'm talking nonsense. So sometimes I'll ask you questions just to see what you're thinking. So number 1 and number 4. This question has repeated a few times. What conclusions could be drawn from this appropriation account? The company is not doing very well. To have net profit at $26,106. That company not doing well?
So what was 36?
36. 36 was, we skipped it because it's a goodwill question and I don't want to mess up all your head. Goodwill not on all the syllabus. Remember, there's an old paper with the old syllabus.
Okay, yeah.
Yeah. Number 38, the company is not doing well. They make $26,000 in profit. Can you come to the conclusion that the company is not doing well?
No,
No.
sir.
Nah, I wouldn't mind at $26,000 in profit. But alas, what you good? The company is recently come into existence. Can you tell that from this?
No, sir.
No, I don't know how they get that either. The company is engaged in profitable enterprise.
Yes, sir. Believe that.
Mm-hmm. More dividends can be paid. Can more dividends be paid?
Yeah.
Yes.
All right. Because they have profits and if you add up the debit side and the credit side, they actually still have money. So that'll be 3 and 4. So that'll be B. Somebody asked me we could do 18 real quick, I think. All right. So to understand number 18, you need to know your formula for straight line method, right? A straight line method for depreciation is the cost of the asset minus scrap value divided by the number of years of useful life. They said the machine cost 6,200, so that is the cost of the asset. It will be kept for 5 years, that's the number of years of useful life, and the scrap value is 200, so that's the scrap value. So I'm just going to plug in figures. The cost of the asset is 6,200, the scrap value is 200, and the number of years of useful life is 5. 6,200 minus 200 is 6,000. 6,000 divided by 5 is 1,200. And that is how we got B for number 18. Number 39. All right, statement Muhammad Patel Statement of affairs. They give us fixed assets, current assets. Think I've seen this question before, but the format was a bit different. But it's the same figures I've seen, I think. They want to know what is net profit for the year. So remember, both sides are to be equal, right? So this side is adding up to 5,500 as your assets. And it's supposed to be equal to your liabilities and your capital. Your liabilities is 1,500 and it's adding up to 5,500. So how much was your capital? How much is your capital for this side to be equal to 5,500?
4,000.
4,000, right? So that means your capital at end is 4,000. So again, you need to know your balance sheet formula to answer this question. Opening capital, add net profit minus drawings gives you this. So how much does net profit have to be for our closing capital to be 4,000? So let's minus the drawings first. 3,000 minus the 300 will be 2,700. 2,700 plus what will give you 4,000?
1,300.
1,300. So the answer for 39 would be A, 1,300. Number 40, they gave us a sales ledger control account. And they said from the sales ledger control account, what is the value of the sales to the month? All you're going to do is get the balancing figure. Right? The missing figure that will make both sides equal. This side is supposed to add up to 5,600. 3,550 plus what will give you 5,600?
2,050.
2,015. You got that by taking 5,600 and minusing 3,550 from it, right?
Yes, sir.
All right. Boom. 2,050. Number 41. A company is allowed by law to sell 100,000 shares at $1 each. Half of these shares were bought from the public. What is the authorized share capital? The authorized share capital is the amount you are allowed to sell, not the amount you actually sold. How much they are allowed to sell?
100,000.
2,000.
100,000. So that's the answer, right? Number 42. Don't quite understand number 39. We'll go back up to number 39 real quick. All right. So number 39 is a balance sheet, right? Look at it as a balance sheet. Your assets is equal to your liabilities plus capital. This is your assets here. Fixed assets plus current assets. It adds up to 5,500. So your liabilities plus capital also adds up to 5,500, right? We have our liabilities here, 1,500. This 1,500 plus our closing capital will equal to 5,500. So the only figure this could be is 4,000. Because 4,000 plus 1,500 will equal to 5,500, right? That is how we got our closing capital, or our capital at end. So I bring it across here. Right. But what they want us to calculate is net profit. Now that we know our closing capital is 4,000, we can calculate net profit. Because we know opening capital plus net profit minus drawings will give us closing capital. So 3,000 plus net profit minus 300, because that is drawings, will give us closing capital of 4,000. 3,000 minus 300 is 2,700. So 2,700 plus net profit will equal to 4,000. And from there, I could just use algebra. Carry this 27 across here. So it becomes negative 27. So net profit is equal to 4,000 minus 2,700, which is equal to 1,300. It's an hour, I agree. Let's go on now. I've seen this question before. Number 42. They want to know what is the amount of the net income or the net loss for the period. Again, we need to know that balance sheet formula. Opening capital. In this case, they invested more. So add investment. And they add a net profit minus your drawings will give you a closing capital. Opening capital is 30,000. The additional investment is 3,000. We don't know what net profit is. Drawings is 4,000. And that is equal to our closing capital of 40,000. 3,000 plus 30,000 plus 3,000 is 33,000. 33,000 minus 4,000 is 29,000. The 29,000 plus net profit is 40,000. How much is net profit?
11,000.
11,000. Number 43.
Take it over now one more time, please.
So it's following the same formula. That's how you need to know, right? Opening capital. Add net profit minus drawings is equal to closing capital, right? It's just that in this case, they had an additional investment of 3,000. So we'll also add that additional investment in. We have all the figures here except net profit. So we need to figure out net profit. Opening capital is 30,000. The additional investment is how much? How much is the additional investment? The person who asked me to do it over?
So 3,000.
We don't know what net profit is. So you just put NP for net profit. How much is drawings?
Drawings is 4,000.
4,000. And when we calculate that, that is supposed to equal our closing capital. How much is our capital at end?
40,000.
40,000. So what I'm going to do, I'm going to take the 30,000, add it to the 3,000, and then minus this 4,000. So I'll just be left with the answer plus net profit. 30,000 plus 3,000 is 33,000. And then 33,000 minus 4,000 is 27,000. So that will leave me with 27,000 plus net profit. 27,000 plus net profit is equal to 40,000. So 27,000 plus how much will give you 40,000? And to get that, what we're going to do is our algebra. Carry this 27,000 to the next side to make net profit the subject of the formula. So it will be net profit is equal to 40,000 minus 27,000. And that is how much? Person who asked me to do it over.
Still gonna be 17.
Later. Well, am I doing something wrong with my calculations just now? Huh?
Yeah, that Matson.
Yeah, 29,000, sorry. 29,000.
This is gonna be 11,000.
11,000, yeah. And that's how we got this, that's how we got C. You understand it?
Yeah.
Yeah, so the whole thing is you had to learn that balance sheet format. They love, as you could see, they love to bring questions where you need to know that balance sheet format to get the answer. Right? The excess of income over expenditure in a non-profit making organization is called what?
The surplus.
Surplus. So they call profits surplus and losses they call deficit. Number 44, the main parts of the accounting cycle are collection of source documents. Is that a main part?
No.
Yeah, it's the very first part. Collection and analysis of source documents. And then you record them into your books of original entry. Then you post them to your ledgers. Then prepare your trial balance. Then you prepare your income statement and your balance sheet. So all four. Did I send you a link for the video in all your group, boy? In all your any WhatsApp group? I did, right? All right. Hmm. Number 45. Number 45, Payne and Qualis. I hope I pronounce it. Anyway, they're not here. Payne and Qualis decided to admit Rose as a new partner. Let me see if we have to do this. The total capital after admission for Rose will be 30,000, of which 10,000. Admission, right here. Wait, he might, let me see. Admitted Rose as a new partner. The total capital after the admission of Rose will be 30,000, of which Rose is to contribute 10,000 for an interest in capital. If Rose brought in cash and a motor van valued at 3,000, yeah, you don't need to know this. It's not in the syllabus anymore. Number 46. The cash book is best used for recording.
Oh, never mind.
What is the cash book best used for recording?
Cash receipts and cash payments.
Cash receipts and cash payments. This one has come fairly often. Cash receipts and cash payments. Number 47. A business operates its petty cash on the Impress system. At the beginning of the month, the petty cashier was given 200, out of which 152 was spent. How much would be reimbursed?
152.
152. They spent 152, they will give back 152. Number 48. Which of the following is not an accounting transaction?
D.
D. Corresponding with customers and creditors. Is talking to them. Sending communication to in the direction. That's not an accounting transaction. Number 49. On January the 2nd, 2025, J. Brown, a debtor, was declared bankrupt. This is, let me see, he owed Elma Brown $800 for goods purchased. What effect would this have on the balance sheet?
So the closing stock order. Okay.
What is going to decrease? Remember, he was owing first, so he was a debtor, but now he's bankrupt, so you're going to write him off as a bad debt. How would that affect your balance sheet?
Closing stock is reduced by 800.
Your debtors. Remember, he was a debtor, but now you're writing him off as a bad debt, so you're no longer listing him as a debtor. So your debtors will decrease. Your debtors will decrease by 800 because you're writing them off as a bad debt. You understand? The double entry for bad debts is to debit your bad debts account and credit the debtors account. So crediting your debtors decreases your debtors. Alright. Number 50. What will be the effect of the firm's balance sheet on the purchase of equipment on credit? I think we did this one just now. Both assets and liabilities will increase, right? Because you just get equipment, so your assets increase, but you bought it on credit, so your liabilities increase as well. So that will be B. Number 51. A trader paid his client $500 by check. What would the double entry be? Is your bank increasing or decreasing?
So decreasing because you pay.
It's decreasing, right? So you're going to debit or credit? Your bank.
Credit.
Credit. So you're crediting bank, and then you're going to debit what?
Trader.
Trader. So the trader paid his client $500 by check. So you credit bank because that's how much there's money is spent. And based on the answers here, the only answer that could work here is B. Because you're not going to debit cash. So the only account here the only answer that works here is B. Right? So normally you would debit the person the payables account that he was owing money to. But since there's not a option here, you'll just put credit bank account only. Number 52, do you have to read it? This is probably the first question CXC ever thought of. I don't know. This has been repeating all the time, but let's go through it. K Khan is a debtor of A and B Enterprises and settles his account of $120 less 2.5% discount. 2.5% discount is $3 by check. The double entry of the book would be, so if it was $120 and we're given a $3 discount, how much money are we receiving?
117.
117. So we're going to debit bank 117. We are given a discount. Is that discount allowed or discount received?
Allowed.
Allowed, right? And discount allowed is an expense. Expenses are always debited or credited?
Debited.
So we're going to debit discount allowed $3. And then K Khan no longer owes us how much? How much?
120.
120, right? So we're going to credit the entire 120 because K Khan no longer owes us that entire amount. That is why we get C, right? I've never seen that in any other order. It's come exactly like this since however long. Number 53. I'm going to see if you all need to know this. Which of the following best describes the item? Yeah, you'll need to know this a few. So, this is a non-profit organization. Want to see it's a club, so it could be a non-profit or cooperative. Seeing subscriptions, club, and if you saw surplus or deficit or something, that would be an indicator as well, right? Right, so what you want to know what represents number 1 and number 2 shown. So it's not going to be profit and loss because they don't do profit and loss accounts. They don't do trading accounts. They don't do profit and loss accounts. The 2 accounts that they do is a receipts and payments account, which is similar to a cash book, and an income and expenditure account, which is similar to your income statement. So with that alone, you know the answer has to be D. And then, bless me, this would be your subscriptions received. So all the income would be on the credit side and the expenditure would be on the debit side. Then they ask, which of the following best describes number 3? So you're not going to lose loss or profit. It's either going to be a surplus or a deficit. Your surplus will be on your credit side. Your deficit will be on your debit side. But that was your balance brought down. If your balance brought down is on your debit side, that means your balance carried down will be where? If your balance brought down is on your debit side, your
On your
balance carried
credit side?
on your credit side, right? So this would be a balance carried down being on the credit side, which means this is a deficit, right? Another way to look at it, your balance is always on the smaller side. If your expenses are bigger than your income, that means you made a deficit. Because your balance is always on the smaller side. So if your balance is on this side, the income side, that means your income is smaller than the expenditure. I don't think a question like this would come because technically, or this is not supposed to be on a syllabus anymore, but they're supposed to know what it is. And now let's pay it this way. The statement of account, you're supposed to know what it is. That is all. And for your paper 2, they ask you to prepare one. So just in case, this how it will work, right? The income will be on the credit side, the expenditure will be on the debit side. And then they ask, what's the correct figure for 4 above? Now that will be the balancing figure. So 4,000 plus 1,500 is 5,500, and the total is supposed to be 7,000. So that figure would be 7,000 minus 5,500, which is 1,500. So you're going to send these in the chat, right? Of course. Number 56, goodwill, skip. Number 57, items refer to the following information. They want to know what's the gross pay. I've seen this question repeat. And I actually like this question. I find this a good critical thinking question. So net pay is equal to gross pay minus
Say when
deductions, right?
I take away the income tax and the national insurance.
Not take away. So remember, your gross pay, your net pay is gross pay minus deductions, right? So gross pay minus these deductions give you a net pay. They want you to calculate your gross pay. So you actually have to add back the deductions to get back your gross pay. So think of it like this. Gross pay was, we don't know how much. And then we minus income tax of 300. And we minus national insurance of 50. And that gave us net pay of 1,200. What they want to know is what gross pay was. So to get gross pay, we're gonna have to add back those things we subtracted. You'll have to add back the 50 and add back the 300. And that will give us 1550. And you could even check it for yourself to make sure it working out. 1550 minus 300 minus 50 will give you 1200. So you know it's working out. Right? So I really like this question. This will catch a lot of students. Net pay is after you minus your deductions. So to go back up to gross pay, you're going to have to add back your deductions. I've seen this question repeat recently, so pay attention. If you get a question like this, remember what you have to do. Number 58, apart from the cash account, which are the following accounts are used to record subscriptions received from applicants of shares in a company. Don't know if this will come. Subscriptions received from applicants for shares in a company. I don't think this will come for the syllabus anymore. So again, let me know how to pay ahead. Number 59, on January 15, Johnson, a wholesaler, sold goods valued at 200 to Slimmer retailer and made the following entries. Yeah, question I just come. So, what does the entry show? Remember, he sold the goods for 200, but then he debit Slim account 150 and he credit sales 150. What does that show? A, B, C, or D? Nobody? Let's see, somebody put some in the chat. Oh, what's 58? No, 58 we skipping because it's not in a syllabus. 59 would be D. Good job, Amaya. 59 would be D. If you notice, there's no record of the discounts. Trade discounts are not recorded, they're just subtracted. So they probably got a $50 discount, so they subtracted it. So the goods were sold with 200 less this trade discount of 50. Very good job, Amaya. When it's paper one is Tuesday. The only reason I'm doing this today is because Econ paper 2 is also Tuesday. So I have to do the Econ paper 2 marathon tomorrow. All right, number 60, using the expenses given in the above table, what is the factory overheads, cost of goods manufactured? Right, so let's see. General expenses, let's scratch that out. Cost, what is the factory overheads, cost of goods manufactured? Do they mean factory overheads only? Or do they mean, let's see, I'm going to calculate. So the factory overheads here would be indirect wages of 900, machinery depreciation, 9,000, sorry. Machinery depreciation of 900, that's 9,600. Legal fees will not go into here. That would be administrative costs. Rent for the factory would also be a factory overhead. So you add that. So that's 10,600. These two costs would be prime costs, so they would not be factory overheads. These are direct costs. The cost of materials consumed and your manufacturer wages will be prime costs. So the only factory overheads would be your rent to the factory, indirect wages, and machine depreciation, which adds up to 10,600. And that is 2007 a lot of repeat questions, but you saw it had some similar questions that you had to use your knowledge of how to do the other questions in order to answer these, right? So the same way, you were able to apply your knowledge to answer these questions. If any new questions come, I want you all to be able to do the same, right? Now we're going to look at 2024, May, June. So number one, we've done this a million times. What's the answer?
1860.
1860. Let's remember your formula. Opening capital, add net profit, minus drawings, equals closing capital. Once you know that, once you remember that, it's supposed to be easy. Number two, the purpose of an electronic clock card is to record
B.
B.
B, sir.
our attendance, employees' attendance. Number three, control accounts are kept in order to assist in management and
A.
right. All control systems. So control accounts, expense accounts, bank reconciliation. All of them are supposed to help locate errors. Number four, which of the following contains asset accounts only?
C. C. C.
Cash, inventory, motor vehicle, furniture. Number five, partnerships are formed for the purpose of.
All three.
All three. Make sure and read this, huh? Because sometimes it might bring something different. I've seen this asked in two different ways. So make sure and read it. Don't just assume. Number six, in a partnership, which of the following transactions are compulsory?
Share of
Sharing of
profit.
profits.
Sharing of profits. Number seven, Ishani's cafeteria does not keep a complete set of accounting records. The bookkeeper provides you with the following information, and they want to know what's the balance of the control account. The balance, right? So we're going to ignore sales, cash sales, because that doesn't go in the control account, only credit sales. Opening any balance brought down for any asset is on the debit side. And for the sales ledger control account, if it makes them owe you more, you debit. If it makes them owe you less, you credit. Because when assets increase, you debit. When assets decrease, you credit. So it makes you owe more, debit, makes you owe less, credit. Credit sales, do they owe more or less?
More.
If you sell to them on credit, meaning they didn't pay you yet, do they owe you more or do they owe you less?
More.
More. So you owe debit, right? Credit sales, 1,000. Cash received from debtors. If they pay you what they owe you, do they owe you more or less? If they pay you what they owe you, less, right? So your credit, cash, 1,250. And then from here, you just have to find your balancing figure. So add up everything on the debit side and minus everything on the credit side, and that'll give you your answer. 1,700 minus 1,250.
450.
450. So the answer is B. Number 8, which of the following formulae represents the correct statement of financial position equation for calculating the value of assets?
D.
Assets is equal to liabilities plus capital. We did this question. Did this one as well. R. Stevens, a petty cashier, receives a float for 350. You remember this question? What was the answer?
C.
Because you have to give back the 350 that we spent. The 320 we spent, sorry. plus you need 50 additional to bring us up to 400. So 320 plus 50 is 370. Number 10, any expense which is written off entirely in the income statement is known as
Capital expenditure.
so capital expenditure is when you purchase fixed assets. Revenue expenditure is the expenditure that is written off into the income statement. So this answer would be
Alive.
don't you rush at once?
Revenue expenditure.
Revenue expenditure. Number 11. First company accountant has not recorded rent owing for the period. Which accounting concept is violated?
Accrual.
Accrual concept, correct. Number 12. P-Hawk has a manufacturing business. The cost of raw materials is 1,900. Rates and rent total 2,000 and factory wages amount to 2,500. This question is repeat for both POA and OE. The number of units produced is 640. What is the cost for 1 unit?
C.
C. So you calculated total cost, which will be 2,500 plus 2,000 plus 1,900. That will give you 6,400. And to get a cost per unit, you take your total cost and divide it by your total units. 6,400 divided by 640, and that will give you 10. Number 11 was the value of the non-current assets. What are non-current assets say?
Furniture,
Furniture. What else?
motor vehicles,
Motor vehicles. Any more?
Premises.
debtors,
Premises. 10,000 plus 12,000 plus 20,000. That is 42,000. All right. Number 14 refers to the following table, which shows the summarized position of Foster and Scott. This repeats often. What is the capital of Foster and Scott Limited at the 6th of March 2021?
90,000.
90,000. You add up your total assets and minus the total liabilities. And I'll give you, so 300,000 minus 210,000. Should give you 90,000. Number 15, which of the following assets will be considered the most permanent, the hardest to change to cash?
Premises.
Premises, correct. Number 16, which of the following arrange the current assets in order of liquidity?
A.
Cash in hand, debtors, cash in bank, and debtors, correct. Now keep in mind questions like this. I've seen questions where they ask this, and then they ask order of liquidity from least liquid, which is the exact opposite. Make sure and read the whole question, right? Just to be safe. Number 17. The motor van was created from AG Motors for use in the business. How should this be recorded? How would you record this?
So debit motor van and credit AG motors.
Debit motor van, because we get in a motor van and we didn't spend cash, so you have to credit who we owing, which is AG Motors. This question came before. Number 18, statement of financial position, expenses owing would be what?
Current liabilities.
Current liability. Number 19, the total credit of the bank column of a 3-column cash book is greater than the total debit. The most likely reason for this situation is that question comes often.
There was an overdraft.
Is an overdraft. Number 20, which of the following accounts shows how profits and losses are shared among partners?
Appropriation.
Appropriation account. Number 21, which of the following entries would not appear in the cash book? We've done this already.
Goods sold on credit.
Goods sold on credit, correct. Number 22 refers to the following summary of receipts and payments for the month of March for a non-government organization. So they want to know what's the cash balance. So we're going to add all the money we get and minus the money we spend. Subscriptions received.
Receipts.
All right. Rent paid.
Payment.
Purchase of games and equipment.
Payment.
Postage of circulars.
Receipts.
That is spent to post the circulars. Proceeds from books of sale. From book sale.
Receipts.
So 250 add 300, that is 550. Minus 150, 60, and 20.
C.
Right, C. Oh, somebody else join in. Number 23. Which of the following documents acknowledges a loan to a company at a fixed rate of interest? We should know this.
B. Debentures.
Debentures. You sound like you say dementors there for a second. That was Harry Potter. For your debentures. Number 24. A business receives 5,000 for rent received and deposits the amount in a bank account. How would this be recorded? You're getting money, right? When assets increase, what are you supposed to do?
Debit.
Debit, right? Good. So you debit our bank account, and what would you credit? The rent revenue or the rent account?
Yeah.
All right. So that would be D. Number 25 refers to the following information. What is the best liquidity position here?
D.
Who is the best? Who is the
Flora.
Flora? Number 26, a businessman offers a reduction in price for prompt payment for goods purchased under which column in the 3-column cash book? If he is given a discount, it would be
Allowed.
discount allowed. This is what, the second time or third time you're doing this? I'm not sure. Number 27, which of the following best describes the double entry system for accounting?
D.
Each transaction must have a debit entry and a credit entry. Number 28, Mr. Brown owns a business. It has no employees, but in recent times, individuals have been interviewed. What type of business is this?
Sole trader.
Yeah, a lot of information. Everything here was irrelevant. Mr. Brown owns a business, so there's one owner. Number 29, they want to know the total allowance for doubtful debts. So you're going to have to calculate. You see, over 3 years, it's 3%. Over 2 years, it's 2%. Over 1 year is 1%. So you're going to have to calculate 3% of 6,000, 2% of 4,000, 1% of 8,000. 3% of 6,000 is 180. 2% of 4,000 is 80.
So I think it's 340, if my math's correct.
Huh? 6,000 by 3%? Oh, you mean when you add up all?
Yeah, when you add up all, if my math's
Oh,
correct.
yeah. I think your maths is correct. Because 80 plus 80 is 160. 160 plus 180 is indeed 340. See a maths in. Number 30. After careful consideration, a business decided to reduce its allowance of doubtful debt from 500. Its trade receivables at the end of the financial year was 10,000, and the firm will decrease the amount allotted towards doubtful debts from 6% to 4%. See, a new provision for doubtful debts is equal to 10,000 multiplied by 4%, which is how much? 400?
Yeah.
Right. So it was 500, now it's 400. Remember, we record the change in provision. If it increased, we record the amount it increased by. If it decreased, we record the amount it decreased by. Did it increase or decrease?
Decrease.
It was
Decrease.
500, now it's 400. How much did it decrease by?
100.
100. So without even looking at the double entry, I know the answer is D, because D is the only one with 100. But just to remember, provision accounts, when provision accounts increase, we credit. When provision accounts decrease, we debit. And as you could see, in this case, when we decreased, the answer that we have there, they debit the provision. You see it? Because it decreased by 100. So the answer is definitely D. Number 31, we get plenty times. 200,000 by $2 is 400,000. 10,000 by $5 is 50,000. And the total together will be how much? What's the total?
450.
450,000. We've seen this question before, more than once. They said each issue was fully subscribed. So they calculate this. If they said the issue was 80% subscribed, we would take this 450,000 and multiply it by 80%. Who remembers the answers? Let me see. Where's cost of goods sold?
56, 53.
And where's gross profit?
31, 645.
I see how often this one has come, right? But just remember, to get your cost of goods sold, it's opening inventory, just in case you change the numbers, add net purchases minus closing inventory. Just remember that. And your net purchases is purchases minus purchases returns. Alright, so once you do that calculation, you will get that 50,653. And gross profit is net sales minus cost of goods sold. And net sales is sales minus sales returns. Just in case the figures change. Number 34, expenses and revenue accounts is classified as what? Are they real? Are they nominal? Are they perceived?
Nominal.
Nominal. Correct. Intangible. Number 35, the owner of a business does not keep proper records. Did this question already, but no. But she knows that her opening capital, again, you see, you need to know this balance sheet format. Come again. Opening capital, add net profit, minus drawings, equals closing capital.
I think it would be B.
It will be B. I believe you are correct. Opening capital is 40,000. We don't know what net profit is. Minus drawings of 1,000 gives you a closing capital of 85,000. Let's minus the drawings. That'll leave us with 39,000. So 39,000 plus net profit is equal to 85,000. So that means net profit will be equal to the 85,000 minus the 39,000. Which will give us 46,000. So that B is correct. Number 36, money traders incurred a loss of 1,500 in December. The business's closing capital is 20,000 and joint was 40,000. What amount is opening capital? So back to back, you need to make a balance sheet format. Your balance sheet formula for your capital. Opening capital, if it's a profit, you add it. But if it's a loss, you minus. Less net loss, less drawings, gives you closing capital, right? Let's see. We don't know what opening capital is, but we know only minus the net loss of 1,500. And we minus the drawings of 4,000. We get closing capital of 20,000. So to get what our opening capital is, we have to add back those things we subtracted to get closing capital, right? So it'll be 20,000, add back the drawings, add back the net loss. 20,000 plus 5,500. And I'll get you how much?
25,500.
25,500. Number 37. A credit balance on the electricity expense account indicates that, remember, prepaid expenses are assets, which will have debit balances. Accrued expenses are liabilities, which would have credit balances. So what will be the answer? A. Electricity is accrued. So you see what I mean when I say apply the knowledge, right? We didn't do this question before, but we did a question where we needed to know that prepaid expenses would be on the debit side and accrued expenses would have balances on the credit side. So you're able to apply the knowledge to the next question. I want you all to be able to do that in case different questions come. K. Antoine was charged 2,400 for electricity for the year. What figure would be recorded in the statement of financial position if 2,700 was paid for the year? He was charged 2,400, but he paid 2,700. What do we record? How much he paid or how much was meant for the period?
How much was meant?
How much was meant for the period, which will be the 2,400, right? Number two.
Then balance sheet.
No, only final position. Thank you. I didn't read that part, you know. So in the financial position, you're going to record the 300 that was prepaid, which will be A. See why you had to read the whole questions? Guys, don't be like me, please. I have ADHD. I tend to skip words and go straight to the end. Don't be like me. Read the entire thing, right? Number 39. A company declares a dividend of 15%. What is the value of the dividends warrant that's sent to the shareholder who owns 1,500 $1 ordinary shares? We did this question already. 1,500 by $1 is $1,500. And 15% of $1,500 is how much?
225.
225. Number 40. Rose contributed 7,000 in cash and a motor vehicle of 3,000 to the partnership. So in total, she contributed 10,000, right? So that's what her capital will be credited. You credit her capital 10,000. The business just got a motor vehicle for 3,000, and when assets increase the debit, so you debit the motor vehicle 3,000, and I just got $7,000 in cash, so you would debit cash 3,000. So the answer for 40 will be C. Somebody just asked was 37 and 38. 37 was A, 38 was A. Right. Last 20. Mr. Smith does not keep proper records. What's the answer for this one? Who remembers?
31.
D.
It was 31, it was C. So the first thing you had to do was calculate the capital, which is assets minus liabilities, right? You did this question before. If this question comes and all you can get this right, I will find all, yeah? And I could fight. So if I get the assets, which will be the cash at bank, the building and the vehicle, and the 4,000 customers owed us. The 1,500 we took for personal use will be drawings, and we owed suppliers 2,000, that will be our liabilities. So our total assets would be 10,000 plus 6,000 plus 15,000 plus 4,000, which is 35,000. And our total liabilities would be the 2,000. So our capital would be 33,000. But he asked for closing capital. Closing capital is opening capital, add net profit minus drawings. We have no net profit, so we're just going to minus the drawings. 33,000 minus the drawings, which is 1,500, will be 31,500. Nice, how we get it, right? This question come. All right. Number 42. Which of the following items would be used to adjust the cash book balance before preparing a bank reconciliation statement? So which one of these would be? And so in the bank reconciliation statement, it starts off with a revised cash book balance. Bank recon statement. It starts off with a revised cash book balance. You add unpresented checks.
So C.
Nope. And then you minus late lodgements. So these figures here, this one, lodgements, that gives you a bank statement balance. You'll see the figures just now. So these things here are in your bank reconciliation statement, which means they are not in the revised cash book. So if you see any answer that has unpresented checks or late lodgements in it or bank lodgements, then you know it can't be the answer. So C had unpresented checks, so this can't be the answer. D had bank lodgements and unpresented checks, so this can't be the answer. B had bank lodgements in it, so it can't be the answer. A is the only one without unpresented checks and late lodgements in it. So it has to be A. It cannot be B, C, and D because unpresented checks and late lodgements do not go in the revised cash book. They go in the bank reconciliation statement. Everybody understood, right? Everybody understood?
Should repeat it.
All right, so the bank statement, the bank reconciliation statement is calculated by doing this. You take an revised cash book balance, add unpresented checks, minus late lodgements, and that gives you a bank statement balance, right? They are asking which of these items would be found in the revised cash book, would be used to adjust the cash book. Unpresented checks and late lodgements would not be used to adjust the cash book because those would be in the bank reconciliation statement. So any answer that has those two things in it would be wrong. You understand?
Yes, sir.
All right. Number, so the answer is A. Number 43, Elvin started his bank reconciliation statement with the bank statement balance. How would unpresented checks be treated? So when I started seeing this one, I started with a revised cash book balance. So I add unpresented checks and I minus late lodgements. When you start with the bank statement balance, you do the opposite. So bank statement balance, you add late lodgements and minus unpresented checks. So when you start the opposite direction, you do the opposite. And that will give you a cash book, your revised cash book balance. So what will be the answer?
B.
Which one?
B.
B? No, it wouldn't be C, it wouldn't be have no effect. Well, this is B, I said and I heard you wrong. Subtract from the balance, all right? Number 44. In preparing for final accounts, a business omitted to include return inwards. Which of the following items would this be would be affected by this omission? Would net sales be affected?
1
Yeah.
and 3.
All right, and gross profit, right? Net purchases would not be affected. Correct. 1 and 3. Number 45, Mr. Ram, a shoemaker, bought a motor van for $11,000 cash. And recording this transaction, he should
A.
all right, debit motor van, because you just get a motor van, and credit cash, because you're spending cash. Number 46.
So 120.
No, 120. 120 is the discount. They want to know the
480.
sales price. So it'll be 600 minus the 120 to get the 480. Watch out for that, eh? That's a common mistake people make. Number 47. They want to know if P. George pays in 12 days' time, how much should he pay? So it's 120, but he gets a 5% discount if he pays within 30 days. So that means he's getting a discount if he pays within 12 days. So you minus 5%. 5% is 6. 120 minus 6 is how much?
114.
114. Somebody asked for 45 and 46. 45 was A. 46 was B. Number 48. The double entry for recording the credit transactions in T-Sing's accounting books is this T-Sing's accounting books, huh? So if we bought it from T-Sing, that means T-Sing sold it to us. So T Singh would credit his sales account because he just sell something, and then he would debit P George's account to show that P George's is owing him, sorry. So that would be D. Alright, so be careful with the wording. Number 49. And number 50 refer to the following information. I remember doing this question. Number 49, what is the share of the remaining profit received by A? So we had to do a little calculating here. $3,873.
And if you know 25% is 3,873 and take the final for
Exactly.
100% and just take it out.
Exactly. There's many different ways. You could find out 75% from there. You could find out 100%. And it's so much different ways you could do it. So let's do it your way, because I like that way, right? 3,873 is equal to 25% or 1/4, right? So 100% would equal to 3,873 multiplied by how much? If there's 1/4, 4/4 will be multiplied by 4, which is equal to how much?
15,492.
15,492, which means 75%. So you could actually multiply that by 75% and you'll get the answer. Or you could take 15,492, as my brethren said just now, and minus the 25%, 3,873. And that'll give you 11,619. For the answer. And number 50, they want to know what is net profit brought down. Alright, so now that I know that this is 11,619, I know that this the total, well, I already know as well. The total profit that was shared up was 15,492, right? So I want to calculate net profit. I'm going to work backwards. I had net profit, add interest on drawings, minus salaries, minus interest on capital to get that 15,492. So I'm going to add back the interest on capital and the salaries, 15,492, add back the 7,000 interest on capital, add back the salaries of 10,000, and then I'm going to subtract the interest on drawings. So working backwards. Normally I add interest on drawings, so I subtract it to go back up to my net profit. And when I do those calculations, I get 29,992. So I took my profits to be shared. I add back the interest on capital. I add back the salaries, and I subtract the interest on drawings. So I work backwards. Number 51, what's the balancing figure? What?
7,000.
7,000. That's the figure to make both sides equal, right? This is adding up to 22,000. This will be 15,000 plus the 7,000 plus 7,000 to be 22,000 as well.
So
Number
what's 50?
50. 50 was 29,992. C. 52, they want to know the total of the cost of goods sold, cost of goods manufactured, sorry. So that will be prime cost plus factory overheads plus opening work in progress minus closing work in progress. So 50,000 plus 25,000 plus 10,000 is 85,000 minus 5,000, which will give you 80,000. So prime cost, add factory overheads, add opening work in progress, minus closing work in progress. Number 53, a vehicle costing 80,000 is expected to depreciate at a rate of 10% per year. What is the total depreciation on the vehicle after 3 years using the straight line method? What is the total depreciation?
24,000.
All right, because 10% of 80,000 is 8,000. 8,000 for 3 years. 8 threes are 24. Number 54. A trade receivable is unable to pay his outstanding debt of 450. However, an agreement was made that he would pay 30 cents of every dollar owed. How would this be recorded? 30 cents for every dollar owed. 450 by 30 cents will give you 135. You're going to receive cash. So you're going to debit your cash 135, and then you would credit your receivables to show that he's no longer owing that 135. So the answer will be B. Debit cash 135, credit receivables 135. Number 55 refers to the following information for Katie. Again, need to know your balance sheet formula. They want to know closing capital. Closing capital would be opening capital. Normally is add net profit, but if it's a loss, you have to subtract it. So opening capital less loss, less drawings, which will give us a closing capital of how much?
1,000.
1,000. Did this one before. Number 56, Porter bought inventory for $500 on credit. In which book of prime entry will this be recorded?
Purchases journal.
Purchases journal. When you buy goods on credit, put it in your purchases journal. Number 57, we did this already. To change 2 to 1 into fractions, we will add the 2 and the 1 to get the denominator. So Karen will be 2/3, Garth will be 1/3. Karen will get 2/3 of the profit, which is 2/3 of 3,600, which is how much?
2,400.
Alright, so Karen getting 2,400, and Garth getting 1/3 of 3,600, which is how much?
1,200.
1,200. So that is E. Number 58. V and R are partners. We share profits and losses the ratio of 30% to 70%. Below are their balances. Blah blah blah. What is the interest on drawings paid by V and R at the end of the year? So much of this is irrelevant, huh? All we need to know for interest on drawings is 2%. 2,000 by 2% is how much?
$40.
40. And then 1,000 by 2% is how much?
Says 1,000 by 5%.
Nope. That 5% is for capital. Interest on drawings is 2% and capital is 5%. They pay the same amount of interest on drawings and capital.
So why they word that like that? Just weird.
Yeah, I know. So interest on drawings is the first thing stated. So that would be the 2%, because they said respectively, right? Interest on capital is the second thing stated. So that would be the 5%. So V would pay 2,000 by
Yeah, so the
2%.
first question where
Mm-hmm. Look, it's because of the word respectively. That is what respectively means, right? It's lining up like that. And then interest
So
on
wait, you can do
drawings.
it back.
Sure. So when they say respectively, so it's like this. When they say Karen and Gat is a partners who share the ratio is 2-1. Because Karen name was first, Karen is the 2, right? Gat's name was second, so we know Gat is the 1. It's just like that. They said interest on drawings and capital 2% and 5%. Interest on drawings was first, so this 2%, which is the first percentage they mentioned, is for the interest on drawings. Interest on capital was second, so this 5%, which is mentioned second, is for interest on capital. Since we calculated interest on drawings, we're just going to be using the 2%. So V, you understand?
Yes, sir.
All right. So V would be 2,000 by 2%, and R would be 1,000 by 2%, which is 20. So it'll be 40 and 20, which is B. 59 and 60. So we're going to do FIFO. No, we don't want to do it. We just have to calculate gross profit under FIFO and gross profit under LIFO. So under FIFO now, sales is 45,000. And to calculate cost of goods sold is opening stock, add purchases minus closing stock, right? We have no opening stock. Our purchases is 10,000, and then we're gonna minus closing stock. And according to this, because you're looking at it for FIFO, closing stock under FIFO is how much? How much is closing stock under FIFO?
so 5,000.
5,000, right? So we're gonna minus 5,000. And that will give us our cost of goods sold. 10,000 minus 5,000 is 5,000. 45,000 minus 5,000 will give us our gross profit of 40,000. So the answer will be D. Then they want to know under AVCO. So under AVCO, it will be the same thing. Difference is the closing stock we're going to use is the AVCO closing stock, which is 3,000. That will make our cost of goods sold 10,000 minus 3,000, 7,000. And our gross profit would be 45,000 minus 7,000, 38,000. So the answer would be C. And that is Jan 2024. Go back
So
to
you posting these on the chat because I think I have to go just now.
yeah, I'm posting these on the chat and I'm recording it. So what I will do, I will upload the recording on YouTube, the entire thing, and I'll send it to you all. So any parts that you all missed, you can watch it in the recording, right?
What?
Yes, I did this paper in 2006. Please don't do any maths to calculate my age now. Right. Can I do over 59? Okay, just now, just now. All right, so number 1. Which of the following items on a balance sheet would differ the most in presentation when compared to the books of a company of a sole trader? This question is to repeat to this day, and that's the capital section. Any company account, you have authorized share capital, issued share capital, and all sorts of different stuff, right? General reserves, retained earnings is way different than the sole traders. Opening capital, add net profit minus drawings. Number 2, a trader bought goods with 800 less 10% trade discount. How much did he pay for the goods?
So 720.
720. Simple. Number 3, a trader draws up a trial balance. Does he do
So
it?
B.
Right. To test the arithmetical accuracy of the double entry post to see if it debits and credits equal. Number 4, what is the total assets? This
So this
question is
repeat
in,
too.
this was in 2025. So 19 years ago, the same question came. Number 5, also repeat. They want to know what is closing stock, right? So opening stock plus net purchases minus closing stock would give you a cost of goods sold. Opening stock plus net purchases is 1,700. No, it's actually different figures, so that's good. 1,700 minus closing stock equals cost of goods sold, which is 1,400. 1,700 minus what will give you 1,400? 300. Number 6, which of the following would not be considered part of the prime cost of a manufactured good? Number prime cost, these with any cost pertaining to the factory, right? Prime cost will be direct cost to the factory. Which one of these is not a direct cost to the factory? I don't know if it's me sticking or if it's you sticking. But I'm assuming you're saying A, office manager's wages, which is correct. You're hearing me good? You just say you're hearing me good?
A.
Alright, A, office manager's wages. Can you hear me good?
You're breaking up a little, but
You hearing me now?
yeah.
Alright. Number 7. The purchase of a motor van on credit from Things Caricom Motors Co. for use in business should be recorded as. When you purchase the motor van, what you'll do?
Debit the motor van
Debit the motor van,
and
correct?
credit the account.
And credit Things Caricom, right? Because you bought it on credit from them. So that would be D. Number 8, a photocopying machine valued at 5,000 is depreciated at 10% using the straight line method. What is the value after 2 years? We did this one.
A.
That is A, because you lose 500 twice. Straight line method, the depreciation doesn't change. Number 9, the purpose of an appropriation account is to do what?
B.
B, to show how net profit is distributed in partnerships or cooperatives.
Yeah.
All right. Number 10, the summarized position of Foster and Scott Limited. They want to know its capital.
So the assets and total assets minus total liability.
Right, and I'll add our calculator how much? $300,000 minus 210,000 is how much?
90,000.
90,000. This question as well, repeat. Number 11, which of the following is not a nominal account? You did this one too?
Furniture.
Furniture, thank you. Number 12, Maria purchased 1,000 worth of furniture for office and used or for office use and entered it in a journal as purchases. How will that error affect the balance sheet? Because it should not have been in purchases, she should have put it in a fixed asset account. So how would that affect it? Would fixed assets be overstated or understated?
Understood.
Understated, right? So that would reduce her fixed assets. And what about her net profit? She put it under purchases, and that would reduce her net profit as well. Because if we put, all right, so that would be A. Number 13, which of the following groups contains current assets only?
So D.
D, correct. All of those are only current assets. I wonder how much of these I'd get correct, boy. Anyway, I get one, so I'll get enough correct. Ram Singh purchases goods valued at 500 on credit. He paid off his bill within the grace period and received a 10% cash discount. How much did he pay? Anybody? 10% of 500 is how much? Alright, could you put the answer in the chat? Well, directly to me. 10% of 500 is 50. 500 minus 50 is 450. Number 15. Under which of the following conditions the trial balance still balance? I guess this used to be one of the questions I used to repeat plenty back in the day. A transaction was completely left out. Would the trial balance still balance?
Yes.
Mm-hmm. Both the debit and credit entry were overstated by the same amount. It was still balancing.
Yes, sir.
Alright. Debit entry was left out only.
No.
No. And both debit and credit were understated by the same amount.
Yeah.
Yes, right? So it'll be 1, 2, and 4.
Yes, sir.
That's B. Number 16, they want to know what is Lagoon's working capital. Working capital is how do you calculate it?
Current assets subtract current liabilities.
Current assets minus current liabilities. The current assets here would be what?
Debtors.
We have debtors here, right? What else?
Cash.
Cash. And what else?
Stock.
Stock. So that adds up to 15,100. And what will be the current liabilities?
Creditors.
Creditors. Anything else?
Bank overdraft.
Bank overdraft. So that'll add up to 14,300. 15,100 minus 14,300 will give us 800. So the answer would be D. And they asked, what is Lagoon's total fixed assets? What is total fixed assets?
21,000.
21,000. The motor van and the fixtures and fittings. Number 18, what is total current assets? It's a dumb question to ask. It will make us calculate working capital, but we had to calculate total current assets. We would have had, anyway, 15,100. You'd had a calculator to calculate working capital. You could at least put this as 16. But anyway, I'm gonna leave them. Number 19, a business which owns goods valued at 500 also had a van valued at 1,000. It owes $50 for goods. If it sells out at this price, the owner's closing capital would be, remember doing this one? It would be the goods, 500.
So C.
C, correct. The goods 500 plus the van of 1,000 minus the $50 that they owe. 1,450. Number 20. Which of the following formulae is used to calculate take home pay?
So C.
C. I think we did this in Jan 2025. So 19 years using the same question. A proprietor wins a, if we not broke, we'll fix it. A proprietor wins a motor van valued $10,000 and decides to put it in the business. Which of the following is the correct entry? We get a motor van. So is a motor van increasing or decreasing?
Increasing.
Increasing. Say debit a motor van. And when you invest into the business, what do you call it? When you start to invest money into a business, capital. Right? And capital, when capital increase your credit. So you would debit. Yeah,
So C.
right. Debit your motor vehicle and credit your capital. Now, in all fairness, right? Before COVID, it was very difficult to get multiple choice papers from CSEC. It was near impossible, which is why they could have repeated questions easily. Not like you could have go back and check. But post-COVID, because it's become easier, I believe at some point in time they will attempt to try to make a change. Whether it's journey all or not, we will find out on Tuesday. But that's why I'm trying to prepare you all like this, right? Number 22, if the following list of assets found in a balance sheet of a retail order is arranged in order of liquidity, what will be the sequence?
So D.
Cashback, debtors, fixtures, motor van, building, correct. Number 23, in which journals are the invoices customers entered? In which journals are the invoices for customers, I believe it's supposed to be there, entered? So we give invoices to customers that we selling goods to on credit, right? Which journal records goods sold on credit? Don't you all rush at one?
Sales.
The
Sales.
sales journal. Good job. If a buyer's invoice has been overstated, the seller will issue. So if it's understated, they use a debit note. If it's overstated, what do you think they'll use?
Credit, no?
Credit note. It's also used when goods are returned. Number 25. Which of the following transactions should be entered in the petty cash book? Which one is a
B.
small cash transaction? B. Postage stamp purchase. Number 26. If the value of fixed assets is subtracted from total assets and the remainder is reduced, by the value of current assets, the result obtained is referred to as fixed assets.
Where?
Correct. Fixed assets subtracted from total assets will just leave you current assets. And current assets minus current liability is the formula for your working capital. That's a nice question. So the answer is C. $27, they want to know accumulated fund.
26.
26, the answer was C. If you minus fixed assets, remember total assets is fixed assets plus current assets. So if you minus the fixed assets from your total assets, that would just leave you with current assets. And then they said it's reduced by the value of your current liabilities, which means current assets minus current liabilities. And that's the formula for your working capital. $27, accumulated fund is another name for your capital, which is assets minus liabilities. But since these are all assets, you'll just add up all of it. And the answer you'll get is
D.
D. So
D.
D.
Actually, remember answering that question. I'll get that one correct. Because I wasn't sure what accumulated fund was at that point in time. So I'll take a guess. Number 28 refers to the information given in the table. The public limited company issued a prospectus offering shares described in the table above. The issue is fully subscribed. How much did the company raise? 20,000 shares at $2 each would be how much?
40,000.
And 10,000 at $5 each is how much?
50,000.
The total is how much?
90,000.
90,000. Number 29. The net profit of a firm was shown as 1,600, and it was later discovered that discounts received was undercast by 10 and purchases understated by 36. Seen this question before? Net profit was 1,600. Discount received was understated by $10. That means normally we add our revenue It was understated, we didn't add enough. So you had to add that $10. And then purchases was understated by 36. If I did 2025 Jan and this recording, yes I did. It was the first question. First paper we did. Right. Purchases is understated by 36. Purchases is normally subtracted. That means you didn't subtract enough. So we're going to minus 36. And that would give us a new net profit of 1574. Number 30. What is the name of the document usually under a company seal and which acknowledges a loan to a company at a fixed rate?
B.
B, the debenture, right? Mhm.
Sir, what's
But
number 29 answer?
number 29 was 1574. That is one that repeats pretty often. Oh, and I was seeing the message. Number 31. During the year, a
So
company.
see, when something on that cost you add, and when it on that
No,
stage you
so
down.
So no, let me go over it. So revenue, discount received is a revenue, right? Remember to calculate net profit. It's normally gross profit, add revenue minus expenses, right? So revenue is something you normally add. But it was understated by $10. That means it didn't add enough. You're supposed to add $10 more. You understand? That's why we add the $10 in that instance. You understand that so far?
So some stuff could be on that cost and you have to take it away.
Mm-hmm. Purchases is normally subtract. Right? So you normally, let's say you're supposed to subtract 500. You're supposed to subtract 500, but you only subtract 400. So it was undercast by 100. You didn't subtract enough. So now you have to subtract that additional 100 to make up the total amount you're supposed to subtract in the first place. So in this case, our purchases was understated by $36. We normally subtract purchases. So this $36 we did not subtract. So we have to subtract it now. You understand? Or you want me to go over it again? You want me to go over it again or you understand? All right. Number 31. During the year, a company bought stationery for 220 and used an amount worth 120. How much of the stationery would you find in the balance sheet? So if they use 220, if they bought 220 and they use 120, what would be the prepayment? How much extra they spent?
100.
100. So that's what you record in the balance sheet. Number 32. The amount of money given to the petty cashier at the start of the period is known as the what?
The impress.
Right. Go to the answers there, that's the best answer. Number 33. A businessman incurred the following expenses. They want to know what's the capital expenditure.
So
What's
what's the
the capital expenditure would be the new machinery and the new vehicle. Number 34.
31?
Over 31. All right, so
So how is it not 120?
because the 120 is what they use and what will be recorded in the income statement, right? What will be recorded in the balance sheet is if there's any accrual or prepayment. Any prepaid expenses will be recorded as a current asset. Any accrued expenses will be recorded as a current liability. If you paid 220, but only 120 was used for the period, that means the additional 100 you paid would have been a prepayment. And that prepaid expense would be in your balance sheet as a current asset. All right, so that 100 would be in your balance sheet. So you have to look at what they asked in any question. Because this same question has come, and they just ask you what would be recorded in the income statement. If they ask you what would be recorded in the income statement, then the answer is 120. But in this case, they ask what would go in the balance sheet. So you have to be careful with that, right?
Okay, so.
All right, somebody asked me to explain number 29 over one more time, right? So our net profit was 1,600. And then we discovered two errors. One, our discount received was undercast by $10. Right? So normally when we calculate in our net profit, we would add a discount received. But since discount received was understated by $10, it means we did not add enough by $10, right? So we add the $10 to make up for that mistake. Everybody good with that part so far, right? Okay, next part now, they said purchases was also understated. But in this case, it was understated by $36. Now, unlike discount received, which is a revenue, purchases is something that we normally subtract to calculate our gross profit. So when it was understated by $36, we actually did not subtract enough by $36. So to make up for this, we had to minus that $36. So it was 1,600, add $10, minus $36. And that's how we got the 1,574. You understand? All right, great. Number 34. Joyce and Keller in a partnership having a capital of 14,000 and 18,000 respectively. This is a goodwill question. We skipping. Number 35. The main reason why a sole proprietor may consider joining one or more persons to form a partnership is that what?
Please, this question from mine.
Yeah. You'll get additional capital and management skills. 1 second.
So what's 54?
What was how much?
54.
54.
I mean 34.
34? No, 34 is a goodwill question. It's not in a syllabus, so we are skipping it. And I don't need to fill your head with anything. That's all you don't need to know. Number 36. An employee works for 45 hours each week at $4 per hour for 40 hours per week and $6 per hour for overtime. His gross weekly wage is, so he worked 40 basic hours, so 40 hours. So, yeah. 40 by 4, which is 160. And then the overtime would have been 5 hours extra at $6. 5 by 6 is 30. 160 plus 30 is how
So
much?
B.
B.
So 190.
Correct. Number 37. On the first of May, R. Brown's opening capital was 3,000. Opening capital was 3,000. He withdrew 400 on the 31st of May, and his closing capital is 5,000. What is his net profit? So again, we need to know. You see how they love to ask this question, huh? You need to know this formula. Opening capital, add net profit, minus drawings, equals closing capital. Opening capital is 3,000. We don't know what net profit is. Drawings is 400. That gives us closing capital of 5,000. 3,000 minus 400 is 2,600. So 2,600 plus net profit is equal to closing capital of 5,000.
So
How
C.
much is net profit?
So
C, right?
2,400.
2,400. 2,600 plus net profit is supposed to be equal to 5,000. 2,600 plus what will give you 5,000?
So 2,000. 2,400.
Right. Correct. So the answer will be C. Number 38. A suspense account was opened for an error of $30 found in the trial balance. Later, it was observed that sales was understated by $30. To correct this error, the journal would be, so whenever you're correcting an error that appears in the suspense account, one of the corrections will be with the suspense account, right? So sales is supposed to be credited. So to fix the error, you have to credit sales 30. Because it was understated by 30. We didn't put enough on the credit side. So if we're crediting sales 30, automatically we'll be debiting the suspense account 30. Whenever we're correcting an error that appears in the suspense account, one of the corrections will always be in the suspense account. Number 39. S. Thomas purchased a machine for $3,250 from Grell & Co. Limited. We did this question twice or once? Twice? I lost count. Paying $1,250 by cash and the balance in 10 days. What is the correct procedure for recording this? So we got a machine for $3,250. So our machine increased. And when assets increase, what do we do?
Debit.
So we debited machine $3,250. We paid cash. Is our cash increasing or decreasing?
So decreasing.
And when assets decrease here,
Credit them.
so we credit in cash. And the remainder would be how much we owe Grell & Co., right? Which is 2,000. The amount we owe them increased. When liabilities increase, what do?
Credit.
Credit. So you debit machinery, 3,250. Credit cash, 1,250. Credit
So C.
Grell & Co., 2,000.
So C.
So C, correct. Item 40 refers to the following information. On March 1st, 2006, Mr. Arthur purchased $600. Purchased $600 worth of goods for resale. He received a 3% discount on the amount. Remember that discount happens one time. The invoice also stated 2%, 20 days, net 30. He paid his check on the 15th of March. From the 1st to the 15th is 15 days. Does he get the discount? But wait, here's the heights. The question is, what was the amount Mr. Arthur received as a trade discount? So none of that information relevant. All they care about is how much he received on the trade discount, which is 600 by 3%. 3% of 600 is how much?
So $18.
How much? 18?
Yeah.
Correct. Hey, one day. Just now. Oh, I guess good, yes. Right. 18. 20 more. I want to do 4 more papers after this, huh? So after we do these 4 here, the last 4 papers are going to be recent papers. We're going to be seeing, we are limited time. We're going to be seeing questions that repeat. When we see questions that repeat, we just put in the answer, right? Just to save some time. Number 41. The reward for profit received by shareholders in a limited company is called what? When you buy shares, what do you receive?
Dividends.
Dividends, correct. Number 42. The following deductions are made from the salary of employees. What is the total amount that should be deducted from employee salary of $1,800 per month? So it's $1,800. It's subtracting 35%, 2%, and 1%. The 1,800 income tax, national housing, and education tax. That will be $684 in total. 1,800 by 35, or you could just add up the whole percentage because it's on the same amount. 1,800 by 38%, and that will give you $684. Number 43, Mrs. Allen invested 20,000, Mrs. Brown invested 5,000, and Mr. Cable invested 5,000 in the same business. The loss sustained during the year was 1,000. The partnership agreement is silent on items of losses. On low profits are to be split at that ratio, right? In favor of Allen, Brown, and Cable, respectively. So 2/5 for Allen, 2/5 for Brown, 1/5 for Cable. How much of the loss is to be borne by Cable? So they are not silent on how losses are shared. Because losses are shared the same way profits are shared, unless they say something differently, right? So that means when they made the loss of 1,000, Alan is going to Cable, who is the third name, is going to get 1/5 of that loss. So 1/5 of 1,000, which is how much?
200.
200. So the answer will be A. Number 34. A business controlled by 2 or more persons with a view of sharing profits is called a what?
Partnership.
Partnership. Which of the following, which would be the effect of purchasing equipment on credit on the balance sheet? We did this one before.
B.
assets would increase and liabilities would increase. Number 46, which of the following best describes the trial balance? We did this one. We said it's a list of balances of accounts. And it's to check the accuracy of the double entry system.
Yeah.
Still if you about that when I think about it. So think about it again, you know. All right. Now, 1 and 4. It's not a financial statement. Number 47. What is the cost of goods sold by Mr. Martin? Cost of goods sold, how do you calculate it? Who can remember without me saying? Pressure.
Opening stock.
So if you opening stock, then you have to
At purchases.
add
Right.
purchases.
And then
Less
minus
closing
closing.
stock.
less closing stock. Opening stock. Add purchases. Less closing stock. 7,000 add 4,000 minus 3,400. That's 7,000 plus 4,000, 11,000. 11,000 minus 3,400, 7,600. Number 38, number 48, sorry. Credit note issued for goods returned by customers will be entered first in the what? Goods returned entered where? Which journal?
What?
Return
Return note.
book. Number 49 and 50 refer to the following balances. They want to know working capital. First calculate working capital.
Current assets minus current liability.
Correct. Current assets will be what here?
Cash.
Anything else? Anybody seen any other current assets?
Prepaid insurance.
Prepaid insurance. Who is that just now?
Diane.
Zion. Correct. Prepaid expenses are current assets. Accrued expenses are current liabilities, right? So total current assets will be 3,800. And the total liabilities would be the accrued expense, which is rent owing, the creditors, and the bank overdraft, which is 1,800.
So A.
So A, correct. And then it asks the current ratio. Let's calculate the current ratio.
Current assets divided by current liabilities.
Current assets divided by current liabilities. Correct. And we already have current assets and current liabilities. So you gotta calculate it. Current assets is 3,800.
So C.
Yep, C looks about correct without me using my calculator. Let me make sure, actually. 3,800 divided by I mean, yeah, 3,800 divided by, I think it's not C. Yeah, it is C. 2.111. So the answer is C. Number 31. What is the prepaid amount for insurance? Who remembers this answer? So remember the prepaid, the balance, the prepaid or the accrual will be the balance, right? Prepaid expenses are assets, so they have debit balances. Accrued expenses are liabilities, so they have credit balances. But in order for the prepaid expense to have a debit balance brought down, the balance carried on will be where? If the balance brought down is on the debit side, the carried on will be on the credit side. So this 600 represents the prepaid insurance, the prepaid expense. This question is still repeat to this day. Number 52, the first question CXC ever made for accounts probably. Never change it at all. Let's repeat. I think this is probably the question I've seen repeat the most. So 2.5% is $3. The person paid 120 minus a $3 discount. So how much money did we receive? It was 120 minus $3 discount.
117.
All right, 117. All right, so we debited 117. The $3, would it be a discount allowed or discount received if we gave the discount?
Discount allowed.
And discount allowed is an expense. Expenses are always debited. So you would debit discount allowed $3. And then we are going to credit K-Can to show he no longer owes the full 120. So debit bank 117, debit discount allowed $3, credit K-Can 120. If this question comes just like this, and all you get it wrong, I'm gonna fly from country to country and find all there. Alright? Don't feel because you're in Guyana or Jamaica, you're safe. I'll come and find you. Make sure and get that correct, please. Number 53. If the closing stock is undervalued, what will be the result? So closing stock would affect your gross profit and your net profit the same way. A change in closing stock would affect your gross profit and net profit the same way. So you see how A is saying undervalued and overvalued? Two different ways, you know that wrong. C, gross profit overvalued, net profit undervalued, you know that wrong. So it's between B and D. So let's see. You subtract your closing stock to get cost of goods sold, right? Actually, we didn't have to go through all that. This have goods available for sale. How do you calculate the cost of goods available for sale? Anybody knows?
Yeah, have the opening stock plus purchases.
Right. Did you mention closing stock? No, right? Because closing stock would not affect your cost of goods available for sale. It's just opening stock plus net purchases. So that eliminated already. It would affect your cost of goods sold and your gross profit. So A, C, and D out. The answer is B. Right? You subtract your closing stock to get your cost of goods sold. The bigger your closing stock, the smaller your cost of goods sold. In this case, it was undervalued, so your closing stock was smaller, making your cost of goods sold bigger. Your cost of goods sold is subtracted from your net sales to get gross profit. If your cost of goods sold is bigger, it's going to make your gross profit smaller. So 53 is definitely B. 54. In an effort to raise capital, a company offered for subscription 200 5% debentures at $100 each. What is the significance of the 5%? Remember, the debenture is like a loan, so that 5% will represent what? What do you have to pay on loans? Interest. So that 5% represents the interest that must be paid on the loan, right? So the company will pay 5% interest to the debenture holder. Number 55, a sales invoice shows 10 items at $210 each. With a trade discount of 20% and a cash discount of 5%. How much should the customer pay if he pays within the credit period, which means he gets the 5% cash discount? So 10 items at $210 each will be 210 by 10, which is 2,100. Remember, you have to minus the trade discount first. You get the trade discount immediately. So we're going to minus the 20%. All right, we're going to minus the 20%. 20% of 2,100 is 420. All right, so we're going to minus 420. And that will leave you with
1,680.
correct. And that is what you're going to calculate the discount on, the cash discount on. So when you minus the 5%, it's going to be 5% of 1,680.
84.
How much? 84, correct.
Yes.
Which will leave you with 1,596. So always remember that, subtract the trade discount first, then calculate the cash discount on what remains. Number 56. The assets of a business total 3,200 and the liabilities total 820. What is its capital? Here's calculate capital.
Right. Assets minus liabilities.
Assets minus liabilities. Assets is 3,200. Liabilities are 820. So what would be the capital?
2380.
2380. The answer is B. 57. Patrick is to join Dennis and Tony in a partnership. Patrick brings in a partnership capital and as capital furniture valued at 3,000, motor vehicle valued at 5,000. In addition, he pays a premium to be paid. There's not any syllabus anymore. Skipping. 58. Which of the following would be prepared in order to reveal the net earnings of a business? The net earnings, net.
Profit and loss.
Profit and loss account. That calculates in net profit, also known as net earnings. If
So
they
what's
said
57?
gross, what's that?
What's 57?
I skipped it because it's not on a syllabus anymore. Number 59 refers to the following information. The above information was provided by a trader. How much was the credit sales for the year? So let's do a PLT account. for our controller sales ledger control account. Just like any other asset, balance brought down will be on the debit side. It said that as at the start of the year was 8,200. So that will be the balance brought down. And when assets increase your debit, when assets decrease your credit. So anything that's making them owe us more, debit side. Anything that's making them owe us less, credit side. Cash received from debtors. Is that making them owe us more or less if they paying us what they owe us?
Less.
Less. So that goes on the credit side. Cash, 17,400. And then they gave us the balance at the end of the year. So our balance brought down on the debit side would be 9,300. So where would be the balance carried down? If the brought down is on the debit side, the carry down will be on the
Credit side.
credit side. So balance carried down, 9,300. So the missing figure will be the credit sales. And the credit sales will be on which side? Credit sales will make them owe us more, right? So that will be on the debit side. And it will be the balancing figure. So you'll add up everything on the credit side and subtract everything on the debit side from it. And that will give us our credit sales. 17,400 plus 9,300 minus 8,200. That will give us 18,500. So the answer would be B. And finally, number 60, a firm's cash book showed a bank balance of 1,750. The bank statement showed bank charges of $33 and $77 interest received, which was not entered into the cash book. What was the bank statement balance? So the cash book had a balance of 1,750. It had bank charges of $33 and that we didn't have, so we have to minus that 33 because that is money that will come out of our account, and $77 interest received, so that is money we get. So we'd have to add that 77. So our bank statement balance, if that was the only differences, would be 1,750 minus 33 because bank charges is money we spending. Add 77 because interest received is money we getting. And that would be 1,794. That is C. And that's the end of that paper. Not a bad paper.
So you posting the rest in the chat, right? I have to leave now.
No problem. I'll be recording all of these, don't worry, and I'll be posting all the papers in the chat at the end. Alright? So have no fear.
Okay, sir. Bye, sir.
Bye. Repeated questions you're running through. Number 1, what was the answer?
1860.
Number 2, the main internal users of accounting information are who?
Managers.
Managers. Number 3, loan creditors and accrued expenses are all examples of what?
Liabilities.
Number 4, which are the following financial statements where director's remuneration be found? So think of this as a big word for salaries, which is an expense. Expenses will be where?
C.
The profit and loss account. Somebody asked what paper this is. This is May 2024.
So if we open this paper and we ain't get no repeats, so
Right? Our course.
we have to go and like personally just get rid of the headquarters because
Something. But don't worry, what you will get. Number 5. Which of the following purposes are partnerships formed?
C.
Or 3.
Or
D. Think him and D. All 3, right? Number 6 was the total value of capital. How do you calculate capital?
Assets minus liabilities.
Which ones are the assets?
Machinery, furniture,
Mm-hmm.
debtors,
Mm-hmm.
inventory, cash.
Mm-hmm. What are the liabilities?
Bank overdraft and credit.
Alright, so our total assets will be 20,000 plus 8,000 is 28,000 plus 10,000 38,000 plus 5,000 43,000. If my maths is correct. Alright, and then our liabilities would be 7,000. So our capital will be how much?
36,000.
Mm-hmm. Number 7. What feature of the partnership implies that each partner can be called upon to liquidate personal property in order to pay the business debts?
so what's the answer for number 6?
agency.
Number 6 was A. What is number 7? This was one of the new questions.
B.
Yes.
A.
Mutual agencies that you could enter into contracts on behalf of everybody.
Unlimited liability.
Unlimited liability. The amount you could owe is unlimited. Voluntary agreement. Just in case they bring one of these for this paper, voluntary agreement would be the partnership deed, where the partners voluntarily create a contract outlining all the rules and regulations of the partnership. And co-ownership of property means all the assets owned by the business are co-owned by the partners. Number 8, in a limited liability company, which of the following groups of persons is paid first after net profit is determined?
D.
D.
D? Are you sure?
I thought it was C.
I'm not
No.
sure.
Ordinary actually paid last. If they
D.
get paid at all. Which one somebody said it just now?
D.
Private shareholders, no. Private shareholders is not a thing.
D.
So remember the debenture holders are persons who give a loan to the company
Mhm.
and they have to be repaid whether the company made a profit or not, right?
Okay.
And then preference shareholders, they are named the preference shareholders because they are supposed to be paid first, right? So in case, but in case of the company being closed down, because the debenture shareholders are supposed to be paid whether profit is made or not, they are basically creditors. They are supposed to be paid first before any shareholders. Preference shareholders will get paid before ordinary shareholders, but debenture holders will get paid before anybody. Well, anybody on this list at least. Number 9, which are the following are profitability ratios? Is net profit margin profitability ratio?
Yeah.
What about gross profit margin? Both of these are profitability ratios, and current ratio would be liquidity. So the answer would be A, 1 and 2. Number 10, which ones are current liabilities?
2 and 3.
2 and 3, correct. Number 11, P-Hawk has a manufacturing business. All right, I remember they made an error here. I remember this. So the answer is supposed to be 10. There's a question that repeats a lot. So they have rates and rent, total 2,000, and factory rates and rent, total 2,000. I think rates and rent copied twice by accident. This was supposed to be 2,500, so it would have added up to 6,400, and then they divided by 640 to get 10. So they had to disallow this question last year because of the error. Number 12, SNS Enterprises bought a motor vehicle valued at 250,000 to deliver goods. 3 years after the purchase, the motor vehicle was still being recorded at the original value. Which of the following accounting concepts was not applied? This is one of the new questions as well.
B.
Which one?
B.
B, correct. The prudence concept. You're supposed to record it at the lowest possible value. In order to record this at the lowest possible value, they should have subtracted depreciation, which they did not. The prudence concept states record all the assets at the lowest possible value. Number 13, which of the following is true of a credit entry? Would a credit entry decrease a bank loan? No, because when liabilities increase your credit. What about increased cash at bank? Also no, because when assets increase, your debit. What about increased office equipment?
Debit.
Exactly, when assets increase your debit. So it has to be D, decrease accounts receivable, which is correct. When assets decrease, you do credit. Number 14, the opening bank balance indicates that the firm has 2,500. Okay, opening bank balance
C.
in its bank account. Anybody has any other answer?
Nah, change that to B.
To B, correct.
Yes, sir.
When you have a balance brought down on the credit side for bank, it means that it's an overdraft. That's another one of the new questions. Number 15. Which of the following best describes the entries on the 8th of May, 2023?
It is a concern, you.
The 8th of May? Yep. See, cash was debited, cash was credited, bank was credited. So that would be a contra entry. Very good. And they ask number 16, what is the closing cash balance? So to get this balance, you're going to have to add up the debit side and minus the credit side. Add up the bigger side and minus the smaller side. So it'll be 1500 plus 250, 1750 minus 150, and that will give you 1600. So that will be B. This whole thing was a new question as well. 14, 15, 16. See how much new questions came? This is why I'm trying to prepare you all for the possibility of new questions. Number 17. A motor vehicle was credited from AG Motors for use in a business. How would this be recorded? There's an old one. We get a motor vehicle, so we debit motor vehicle, and we credit AG Motors. You remember this one?
Yeah.
All right, number 18. What does this represent? The gross profit ratio is gross profit divided by net sales, or total sales in this case. So the answer would be what? D?
D.
All right. And if they asked, what does the 185,530 represent? What the answer would have been?
D.
It would have been C, right? The gross profit. Just in case they bring it. Number 19, the credit balance brought forward in P. John's revenue account is $25. This means that for the year, $25 in rent revenue is. So rent revenue is normally credited, right? If there's prepaid rent revenue, so let me do it like this. Prepaid rent revenue is a liability. Prepaid revenue is a liability. Because if somebody paid us revenue in advance, we now owe them money. We now owe them whatever they paid the revenue for. Accrued revenue is an asset because that means they owe us something. Liabilities have credit balances. Assets have debit balances. So if we have a credit balance of $25, is that prepaid or accrued? Prepaid. Number 20, there's a new one as well. Number 20, which of the following items can be used to adjust the cash book balance before a bank reconciliation statement is prepared? Remember, we went through this. We said in the bank reconciliation statement, the only adjustments we have, so balance as per cash book or revised cash book balance. We add unpresented checks and we minus late lodgements. So these adjustments are made in the bank reconciliation statement, not in the revised cash book. So any answers with those would be wrong. So that's why A is wrong. That's why C is wrong, because bank lodgements and unpresented checks. And that's why D is wrong, because D has unpresented checks. So the answer has to be B, direct transfers and dishonored checks. Number 21, the debit side of the trial balance exceeds the credit side by 1,200. A suspense account to be opened where?
The debit side.
No, the debit side is bigger than the credit side. So you'll have to put it on the credit side to make both sides equal. So the debit side exceeds the credit side. So the credit side is smaller. Alright, the balance goes on the smaller side. Try and remember that just in case this question comes. The suspense account goes on the smaller side. to make it even. Number 22, money spent by a company on the purchase or improvement of non-current assets is referred to as is that capital expenditure or revenue expenditure?
C.
Capital.
Capital expenditure. Number 23 refers to the following information. What is the rate of inventory turnover? I can't remember if there's any question or not. Who remembers the inventory? I think there's only one, you know. Who remembers the inventory turnover ratio?
Yes, that's a new question.
So it's your cost of goods sold over average inventory. I want to see a new question. I mean, I don't think this ever came before. But you see how much questions? That was new, huh? And this year, last year, me. So your average inventory is the open inventory plus the closing inventory divided by 2, right? So that will be 37,000 divided by 2, which is 18,500. And the cost of sales is 20,000. So 20,000 divided by average inventory, which is 18,500. So I wouldn't be surprised if they ask about other ratios as well. Right, this gives you a 1.081. So the answer is A. So they give you inventory turnover. It's cost of goods sold divided by average inventory. Number 24. What amount will I pay any purchases in the trading account? What amount will I pay as purchases? So what you have to do is calculate your credit purchases and add it to your cash purchases. So you'll open up purchases control account to do this. We're gonna purchases control account to do this, right? So this is like a liability account. When liabilities increase your credit, when liabilities decrease your debit. So the balance for any liability account will be on the credit side. So the balance at the 1st of Jan will be on the credit side. Balance 4,900. And anything that makes us owe more, we credit. If we owe less, we debit. So cash paid to suppliers. So we paying off what we owe. Does that make us owe more or less?
Less.
Less. So that will go on the debit side, right? Cash 15,000. Then we have the balance at the end of the year. This is not going in here because this is cash purchases. And we're only looking at credit purchases right now, right? So we have the balance at the end of the year, which is 2,000. We know our balance brought down is on the credit side. So where will the balance carry down be?
On the debit side.
On the debit side. So balance carry down will be 2,000. And the difference between both sides would be the missing figure, which is our credit purchases that we're trying to calculate. So credit purchases would be the 15,000 plus the 2,000 minus that 4,900, right? Because remember, both sides had to be equal. So 17,000 minus 4,900 Apologies, got disconnected. So as I was saying, the credit purchases now will be the difference between both sides, right? It will be the balancing figure. So I'll add up the debit side, get 17,000 minus the credit side of 4,009, and that will give me the credit purchases of 12,100, right? But what we want is total purchases. They want the purchases that would appear in the trading account, which is total purchases. Total purchases is cash purchases plus credit purchases. So that'll be 12,100 plus the 5,800 cash purchases. Which is 17,900. So they brought a question like this before, but it was on a thing was based on the sales ledger control account. Actually, I think they brought a question with purchases ledger control account before too. Number 25, the cost of raw materials used in production would be how much do you calculate this? Anybody have any idea? There's any question too?
Prime cost,
Prime cost. Prime cost what?
and direct wages.
What you do with it? You add it? Or
Prime cost plus factory wages minus direct wages.
close. So your prime cost is made up of your direct materials, which is your cost of raw materials used, plus direct labor, which will be your direct expenses, plus your the direct labor, which will be your direct wages, sorry, plus any direct expenses, right? Which in this case, it doesn't seem to have any. Right? We want the cost of raw materials used, which is our direct materials. Right now, it have no direct expenses, so our prime cost is made up of direct materials and direct labor. Factory overheads is not part of that calculation, so we're leaving that out. So prime cost would have our raw materials used plus direct wages. So prime cost is 89,850 is equal to our raw materials used, which is our direct material, plus our direct wages, which is 66,000. How much is our direct material? So I'll put plus instead of equal. All right. How much is our direct material? The prime cost is made up of our direct wages plus direct material. They give us prime cost and they give us direct wages. Let's use that to get our direct material. 23,850. So you take the 89,850 and minus the 66,000 from it. All right, that's a new question as well. So if this repeats, you all know what to do now. Number 26, which of the following will be treated as prime cost in a manufacturing account? Which one of these four would be a prime cost?
Direct wages.
Direct wages. We know direct material, direct wages, and direct expenses are the prime costs. Number 27 was also a new question. They said payments made to committee members in cooperatives are known as,
B.
is known as what?
B. A commission.
They call it an honorarium. So this was also a new question. And it's the first time they ever asked this. So you can keep that in mind. Payments made to committee members in a cooperative is called an honorarium. So if it comes, you know the answer. Number 28, they want to know the total value of the float. So your balance was 15, and then they transferred 85. Your balance is $15, balance brought forward, and then they transferred $85 cash to bring it up to the value of your float. So what's the value of your float?
100.
100. Also a new question. Number 29, the $85 in cash, which was received on the 1st of August, represents the what? Is it the value of the float, the restoration of the impress, the cash from the previous period, or the expenditure from the petty cash on the month of August?
B.
B, the restoration of the impress. So they're giving you back the money you spent from last month. 30, by how much should the petty cashier be reimbursed at the end of August? So the cashier spent this amount of money. Let's see how much that is. 10 plus 20 is 30. 30 plus 14 is 44. 44 plus 25 is 69. 69 plus 30 is 99. So he spent $99. So they need to be reimbursed $99. All of those are also new questions. First time ever. Well, you notice that, right? For those who've been practicing past paper questions. That's why I'm saying it's important for us to be able to understand the questions, not just memorize answers, just in case. Now, Jan 2025 was the opposite. Jan 2025, which is the latest paper, had a lot of repeats. So you never know. But May 2024 was different. Number 31, the public limited company issued a prospectus offering the shares described in the following table for sale at par value. The issue was fully subscribed. How much capital did the company raise? We do this one already. 200,000 by $2 is $400,000. And 10,000 by $5 is $50,000. 400,000 plus 50,000, 450,000. Number 32. The owner of the business does not keep proper records, but she knows that her capital was 40,000 at the 1st of Jan, 85,000 at the end of Jan, and she withdrew 1,000 for inventory. What is her profit for the year? You remember this? Well, to do it, you'll need a formula. Opening capital, add net profit, minus drawings, is equal to closing capital. Opening capital at the start of Jan was 40,000. We don't know what net profit is. We minus drawings of 1,000, and that gives us closing capital of 85,000. 40,000 minus 1,000 is 39,000. So 39,000 plus net profit is equal to 85,000. How much is net profit?
46,000.
46,000. I think this question came in Jan 2025 as well. Number 33 refers to the following information relating to the salary of different categories of workers. What is the direct labor cost? Who here would be considered direct labor?
Machine operator.
Just the machine operator. The supervisor would not be considered direct labor, neither the accountant, and the maintenance worker would be an overhead. Because the maintenance worker would not be directly related to making the good, it's just making sure the machine's in working condition. That's about it. So it will be indirectly related to the making of the good. Number 34. We do this question already. What conclusion could be drawn? Is the company profitable?
Yes.
Is the company not doing well? Can we jump to that conclusion?
No.
No. More dividends can be paid. Can more dividends be paid?
Yes.
Yes. So that would be 1 and 3. Wages are usually paid how often?
Monthly.
Monthly. Then that was a new one as well. Number 36. On the 1st of June, P. Shark, a sole proprietor, owed creditors 4,300. During the month, he paid 13,100 by check, and at the end of the month, he had a balance owing. His balance owing was 2,700. Cash purchases was 3,500. What is his total purchases for the month? So we already have cash purchases. What we need to calculate is the credit purchases. So we're going to open another purchases control account. And the purchases control account is a liability account. Balance brought down for liabilities away. Debit side or credit side?
Credit side.
Credit side. So on the first, the balance was 4,300. So balance brought down 4,300. During the month, he paid 13,100 by check. Does that make him owe more or less?
Less.
Less. So what side does that go on? Debit side or credit side?
Debit side.
Debit side. So you put in a cash, 13,100. And then they said at the end of the month, his balance was 2,700. So balances for liability accounts are on the credit side. But if the balance brought down is on the credit side, then the balance carried on will be where?
Debit side.
Debit side. So I'm going to debit. Carry down 2,700. And the missing figure would be the figure we're trying to calculate, which is our credit purchases. So you'll add up everything on the debit side and minus the credit side, and the balancing figure would be our credit purchases. 12,100 plus 2,700 minus 4,300, and that will give us 10,500. But that's just our credit purchases. Total purchases is cash purchases plus credit purchases. Our cash purchases is 3,500. And we just calculated credit purchases to be 10,500. So that adds up to, what did I do? A calculation wrong where? That's not. Oh yeah, boy. It's 13,100 cash you paid, not 12,000. My bad. So this will be 11,500. 11,500 plus 3,500 is 15,000. Number 37, finally, I repeat. They say they make a loss of 1,000 and the partnership is silent on losses, but profits are shared 2 to 2 to 1. We know we're gonna add up the three numbers to get the denominator. So that'll be 2/5, 2/5, and 1/5. They want to know how much cable getting. Cable will be the 1. So cable will be 1/5 of 1,000, which is how much?
200.
200.
Finally.
Repeat question. Number 38, which of the following ratios describes the liquidity? Another repeat question. A. 39 and 40 refer to the following information provided by K, a sole trader. What is the credit sales for the month of May? So we're going to have to do up a sales ledger control account. But you see how different this year was, right? That's why I feel like doing this paper is so important. That's why I feel like, as I wanted to do the old papers to give all your new questions. So the sales ledger control account is like a debtor account or asset account. Assets have debit balances. So the balance brought down here for 3,000 will be on the debit side. And everything that's making them owe more will go on the debit side. Anything that's making them owe less will be on the credit side. When assets increase your debit, when assets decrease your credit. Return inwards, do they owe more or less? Less. Because if they return the goods, you don't owe for it anymore. So you're going to credit. Bad debts. Owe more or owe less? Less. Because they write them off as a bad debt, they don't owe you anymore. Bad debts 200. They give them a discount. Do they owe more or less?
Less.
Less. So debit side again, discount allowed, 100. Checks received. Do they owe more or less? If they pay you what they owe you, do they owe you more or less?
They owe you less.
Less. So checks received, 7,000. And then finally, the balance brought down. We know assets have debit balance brought down. If the balance brought down is on the debit side, then the balance carried on will be where?
Credit side.
Right. So balance 4,000. And the missing figure to make both sides equal will be the credit sales. So the credit sales will be the difference of both sides. So I'll add up the credit side, 7,000 plus 4,000 plus 100 plus 200 plus 500 minus the debit side from it, 3,000. And that would give me 8,800. But that's credit sales. Total sales will be credit sales plus cash sales. Oh no, this was credit sales. And I'll see what is total credit sales for the month. So that is just it, 8,800. B. Number 40. On the 31st of May, it was discovered that a customer's check of 150 had been dishonored. What will be case update for the sales ledger control account? So remember, it's the same question. So what will the balance, right? So the balance right now is 4,000. If there's what do you call it? Dishonored check that makes them owe us more. Because before they would have paid us that money, and we thought they was owing us less, so we would have credited. But now that it's dishonored, they owe us that 150 again. So we make them owe us more. So we will put that 150 on the debit side. All right? Which will make our balance
4,000.
4,150. Let's check. It would be 7,000 plus 100 plus 200 plus 500. Yep, 4,150. It would increase the balance by 150. So the answer would be D. All that was new. 41, a repeat question. Rose contributed 7,000 in cash and a motor vehicle with 3,000 to a partnership. Rose's contribution to the partnership would be recorded in the journal as
C.
30.
which one?
C.
I hear C and I hear D. C is the correct answer, right? Capital is always credited. So you would credit Rose's capital account. The business just got $7,000 cash. So you debit cash 7,000 and you got a $3,000 motor vehicle. I don't know what motor vehicle is for 3,000, but that's what they got. So the answer will be C. And it was a really nice bicycle or something. I don't know. Number 42. On the 2nd of March 2023, Lan bought goods worth $630 on credit. He received a 3% discount one time. So 630 minus 3% discount. 630 minus 3% equals $611.10. One time. The invoice stated 2% 20 days, net 30 days. How much would he have to pay if he pays on the 8th? So if he pays on the 8th, he gets the 2% cash discount. And that 2% cash discount will be on this figure. Remember, you always minus the trade discount first. So $611.10 minus the 2% cash discount minus 2%. That will give you $598.88. So the answer for this one is B. This is a repeat question. It just we just didn't do a paper with it yet. Number 43. In a partnership agreement, which of the following transactions is compulsory? You're supposed to know this one.
D.
The sharing of profits and losses. Number 44. To which account should depreciation of office machinery be transferred to? Supposed to know this one as well.
D.
Is an expense. Where would you get the expenses?
Profit and loss.
D.
In the profit and loss section. Good job. Number 45, they want the asset test ratio. Asset test ratio is current assets without inventory divided by current liabilities. So, current assets without inventory divided by current liabilities. So you could add up your current assets and just leave out inventory. So that will be, what will be your current assets without inventory?
Cash in hand.
Cash in hand and
The debtors.
and your debtors. So that is 11,000 divided by what's your current liabilities?
The creditors.
Creditors. Anything else?
Rent owing.
Read to win. That adds up to 2,000, right? 11,000 divided by 2,000 will give you 5.5. My maths is correct.
Yes, sir.
Another new one. It's another new question. What is the current ratio for the period? So the current ratio will be current assets divided by current liabilities. So your current assets would have been 11,000 plus the closing stock of 1,000. So that will be 12,000 divided by your current liabilities of 2,000. 12,000 divided by 2,000 is how much? 12 divided by 2.
6.
6. Number 47 refers to the following information. Montego Limited calculates its allowance for doubtful debts the rate of 2%. What will be the accounting entry for recording the allowance for doubtful debts in 2022? So in 2021, the doubtful debt would have been 6,000 by 2%, which is I think it's 120. And then in 2022, it would have been 5,000 by 2%, which is 100. So did it increase or decrease?
Decrease.
By how much?
20.
By 20. And remember, for provision accounts, when they increase, what do we do? When it increases, do we debit or credit? Who remembers? If your provision account increases, you credit it. If it decreases, what do you do?
Yeah, that
You debit it, right? It just decreased by 20. So we're supposed to debit our provision account by 20. Which one of the answers says debit provision account by 20? Or the allowance account by 20? A, B, C, or D?
Yeah.
You don't see that? A. Debit your allowance for doubtful debts. Credit profit and loss. Number 48. A debt is considered to be a bad debt if the account receivable
Fails to pay.
fails to pay. That was a repeat question. 49 and 50 now.
Answer is A or B.
Yeah, so scratch you wrong.
Of course, actually fails to pay, but I scratched the wrong thing. Thanks. Number 49 and 50 refers to the following bank account. They want to know the record of the bank and the opening balance represents whether it be asset, revenue, liability, or expense.
Assets.
The bank account on the debit side will be your what?
Assets.
Asset, right?
Correct.
No, asset is correct. And what will the balance carry down be?
So the credit.
Yeah, how much? You sure it's credit?
Yes, sir.
Calculate it and see. Which side is bigger? The debit side or the credit side?
So yeah, debit side.
Calculate it and see. 11,000 plus 5,600 is 16,600. 9,000 plus 8,400 is 17,400. So the credit side is bigger than the debit side. So the balance carried on will actually come here on the smaller side. And how much would it be? You have to add up the bigger side and minus the smaller side from it. How much would it be?
800.
800. So it will be debit 800. Number 51. Based on the information above, the working capital would be, the formula for working capital is current assets minus current liabilities. What will be current assets here?
So cash at bank and in hand.
What else?
Your receivables.
Receivables. Anything else?
Not that I see it.
That one more?
Inventory.
Inventory. So 5,000 plus 2,000 is 7,400, because 2,400. 7,400 plus 4,600, that is 12,000. And then your current liabilities would be what? Anybody? What would be your current liabilities? Gotta call names, boy. Oh no, my internet. You hearing me?
Yes, sir.
Alright, what would be your current liabilities?
So yeah, trade payable.
Trade payables, and what else?
The expenses.
Accrued expenses, right? That will add up to 5,500. 12,000 minus 5,500 will give you a working capital of 6,500. So the answer will be B. I wanted to do a couple other papers after this, but I feel like all this song and I call you feeding. Are you feeding?
Ah, sir.
Or is that now or yeah?
Not really.
So they could do one more of this?
Yeah.
Alright. Item 52 refers to the following information for Jesse Manufacturing Limited. What was the cost of production for Jesse Manufacturing? So that would be prime cost, add factory overheads, add opening work in progress, minus closing work in progress. You're going to ignore this, and you're going to ignore this. The cost of production is prime cost, add factory overheads, add opening work in progress, minus closing work in progress.
So
So how much?
37,000.
37,000. C. 20,000 plus 15,000 is 35,000. 35,000 plus 5,000 is 40,000. 40,000 minus 3,000 is 37,000. If revenue expenditure is overstated, which of the following would be affected? Your revenue expenditure is the expenses recorded in the income statement. Which one will be affected?
The working capital.
Remember, your revenue expenditure is the expenses in the income statement.
Profit.
Your profit. You use the expenses to calculate profit. So that'll be B. Number 54. The total of the written outwards journal is transferred to where?
D.
D. Correct. Remember, I give you a pride. Stands for purchases written inwards, drawings, and expenses. Those are debited. All the other accounts, sales return outwards and revenue, are credited. So return outwards would be credited. Number 55, question are repeated. We see we still need to know our closing capital formula. So it's normally opening capital, add net profit, but in this case it was a loss. So it's opening capital minus loss minus drawings. That will give us closing capital of how much?
1,000.
1,000. 56 and 57 refer to the following information and the receipts and payments. They want to know what's the opening bank balance. So they gave us the closing bank balance and all these other transactions. So you're going to have to work backwards to get the opening bank balance. So all the stuff that we would have normally added, we're going to subtract. All the numbers that we normally subtract, we're going to add. So we start off with our closing bank balance of 10,000. We'll minus the donations of 2,000. We'll minus the fees collected of 9,600. We'll minus the receipts from the SA of 4,000. We'll add back the purchase of the prizes of 2,000. And we'll add back the purchase of the photocopy machine of 6,000. And that would give us 2,400. You all understand why I did that? You want me to go it over again? Anybody wants me to do it again? Really silence to me no. And what's the total capital expenditure? Capital expenditure is in a purchase fixed assets. What was the fixed assets we purchased or fixed asset we purchased?
6,000.
The photocopy, right? So that will be the 6,000. Number 58. An asset purchased for 1,000 depreciates at a rate of 10% per annum using the reducing balance method. What is the book value of the asset at the beginning of the third year? So is the reducing balance method, I think we did this already.
Yeah, C.
And the answer was C. For the first year we minus 100, second year we minus 90. So you end up with 810. Number 59, they want to know what is the charity's closing bank balance. So we started with 3,000. Operating expenses, do we add or minus?
Minus.
Minus. Receipts from barbecue.
Add.
Add. Receipts from donations.
Add.
Receipts from garage sale.
Add.
So let's see. 3,000 minus 1,000 is 2,000. Plus 5,007, that is 7,000. Plus 1,000, that is 8,000. Plus 3,000, that's 11,000. So the answer is B. And then number 60, inventory was purchased from M. Smith on credit for 2,400. So purchases is always debited. Remember the PRIDE acronym, purchases, return inwards, drawings, and expenses. Purchases are always debited, which means you're supposed to credit M. Smith, but you post it into N. Smith account. So we credit N. Smith. So to fix this, so right now, M. Smith account dry, and we have the amount credited in N. Smith's account in error. We need to cancel it out of N. Smith's account. Right now, it's on the credit side of N. Smith. To cancel it out of N. Smith's account, what can we do?
Debited.
Debited, right? You debited 2,400 to take it out of N. Smith's account. And then what account will be credit to put it where it was supposed to be?
Empty.
M. Smith would be credited. So you debit N. Smith and credit M. Smith. So the answer will be D. And that is May 2024. The paper with the most new questions we've seen in a long time. Topic May 2020. Hopefully it was a good choice. Again, the ones that we know, we speed running through. A non-trading account is mainly concerned with what? Would a non-trading account care about profits?
No.
What they care about? What charities and clubs and stuff care about?
Providing services.
Providing services to its members. So the answer is D. Number 2, the term accounting refers to
C.
recording, analyzing, and interpreting of business information. Number 3, rent expense, which is still owing at the end of the period, must be debited in the profit and loss account and shown in the balance sheet as a liability. Which accounting concept is represented here? What accounting concept is that? Accruals concept, correct? So remember last time, this question came during the year a company bought stationery for 220 and used 120 worth of it. And they asked what will be recorded in the balance sheet. So now they're asking what will be the figure posted in the profit and loss account. So you see why it's important to read the question, right? So what will go in the profit and loss account if 120 was used this period?
100.
No, the 120.
Yeah, my bad.
Yeah, the 100 would have been if it was the balance sheet question. Number 5, what's the total assets? We do this question.
The motor vehicle receivables and
On the building. So that is 14,000. Number 6, which are the following list of current assets are arranged in order of liquidity? Remember, read the whole thing because sometimes they ask order of liquidity, but then they say starting from the least liquid. But in this case, it is for order of liquidity. So what will be the answer?
B.
B. B is the only one that started with cash. So that made it a bit easier. Number 7, we know this answer already. Total assets, 300,000 minus total liabilities, which is 210,000. Assets minus liabilities will give us a capital of B, 90,000. Number 8, let me see if you remember. What does the 529,800 represent?
the total sales.
Total sales If they had asked about the 185,530, what would that
Gross
represent?
profit.
Gross profit.
Yeah.
Number 9, the following assets were found on the statement of financial position for the retailer. What would be the best order if these assets were arranged in order permanence? Order permanence, the one hardest to change to cash goes first.
D.
Which one? D?
D. Yeah.
Alright, you put your fixed assets first, then your current assets. Number 10, which of the following items would not appear on the cash book?
The goods sold on
With goods sold on credit.
Correct. Number 11, in cooperative society, the daily affairs are administered by
the
D.
person elected.
the persons elected or appointed to do so. Correct. Number 12, sorry. Credit notes issued for goods returned by customers will be entered firstly in the
Turn inward.
return inwards, correct. Mr. Hoyt, a grocer, bought a computer and credit from TAN Company. We do this one already. We get a computer, so you debit computer, and we didn't pay any money, so you have to credit who we bought it from. In this case, will be TAN Company, so it will be D, debit computer, credit TAN Company. Number 14, what does the asset test ratio indicate? A, B, C, or D? Remember, the asset test ratio is current assets minus inventory divided by current liabilities. So what will be the answer?
B.
So
A.
A.
A. Current assets minus inventory divided that's available to pay your current liabilities. Number 15, which of the following accounts is not nominal? So not
Furniture.
intangible. And that is furniture. We all sit down on furniture right now. Number 16, which of the following account is usually transferred to the trading and profit and loss account? So again, if it have any assets, liabilities, capital, or drawings, it cannot be the answer. Where's the answer? Anybody I didn't hear? So it can't be
C.
A. Right, C. It can't be A because it have premises and drawings. Can't be B because it have drawings. And it can't be D because it have furniture. Number 17, which of the following items is a capital expenditure? What will be the answer here?
Purchase of machinery.
Purchase of machinery, capital expenditures when you buy fixed assets. Number 18, in order to avoid writing numerous checks for small amounts, a firm may set up a what?
Petty cash fund.
Petty cash fund. Number 19, we know this one. These were sales when Mr. Kane sold a customer 550, that was sales. But this 500 Mr. Kane took for himself was drawings. So that didn't make up the total sales figure. Total sales figure will be the 50, the 75, and the 550, which added up to 675. Huh. And I'm going to go through number 22. We do it so much times. Number 20, Mr. Ram, a shoemaker, bought a motor van for 11,000 cash. And recording the transaction, what should we do?
A.
A. Debit the motor van, credit cash. Number 22, in Mr. Lau's ledger, an entry on the debit side of the drawings account and an entry on the credit side of the bank account means what? If it debit drawings and a credit bank, what does that mean?
B.
The bank put money? No.
C.
It would
No,
be
D.
D. He took money for personal use. Remember, drawings is when they take money out of the business for personal use. Sorry. Or the whole Mrs. Lower he, yes, my bad. And we know he can, he debited 117, that is how much money he gets. He debit discount allowed $3 because discount expenses are always debited. And a crediting K can the 120 to show he no longer owes for it. That question has come so often. Number 23, remember we went back to 2006 and see that question. Huh? The formula for working capital is how much? Is what?
Current assets minus current liabilities.
Current assets minus current liabilities. Number 24, what is the total amount of non-current assets? What do you mean non-current assets here?
The land and building,
Land and building,
fixtures and fittings.
fixtures and fittings, and one more,
Motor van.
the motor van, which will add up to
C.
C, 14,600. Number 25 refers to the following data which was taken from the records of hardware store at the end of the fiscal year. They want to know what is gross profit. Who remembers the answer? Who remember the figure? I hear
31,645.
31,645. That's how often this one has come, right? Is that I calculate net sales first, which is sales minus returning words. Then you have to calculate cost of goods sold, which is opening inventory. Cost of goods sold is equal to opening inventory. Add net purchases minus closing inventory. And net purchases is purchases less purchases returns. Number 26 refers to the following information supplied by a sole trader. They want to know what is the net profit percentage. First thing you have to do is calculate net profit. Net profit would be gross profit, add revenue minus expenditure. Gross profit is 12,000. What's the revenue? Anybody? What's the revenue here?
Discount received.
Discount received. You must have the words received, revenue earned in the name. And what are the expenses?
Rent expenses.
Rent expense. Anything else?
Discount allowed.
Discount allowed. So that will leave you with 7,000, right? 12,000 plus 2,000 is 14,000. 14,000 minus 3,000 and 4,000 is 7,000. So your net profit is 7,000. Your net profit percentage is net profit over net sales. Multiply by 100. So that would be 7,000 divided by 30,000. Multiply by 100. And that will give you how much?
17%. No, 23%.
23%. The answer will be C. Number 27. Another question we did before. They want to know the current ratio as current assets divided by current liabilities. The current assets would be inventory, receivables, and cash. The current liabilities would be your bank overdraft and your payables. The total current assets is 1800, and the total current liabilities would be 1100. 1800 divided by 1100 will give you how much? 1.64
Yes, sir.
or 1.636, just approximately 1.64. Number 28, on the 1st of Jan 2016, 10,000 was paid towards advertising. Of this amount, 7,000 was used on the 31st. What amount would be the prepaid amount? If we paid
3,000.
10,000 but only use 7,000. How much?
3,000.
3,000. 29, depreciation and accounting savings can be defined as what? So this one will be C, right? The cost of using a fixed asset for an accounting period. Straight line method and reducing balance method is not what depreciation means. That's just the methods for calculating it. So the answer is C. The cost of using a fixed asset, because you're using a fixed asset, it's getting wear and tear and losing value. Number 30, to which of the following accounts will depreciation of office machinery be transferred? We've done this. What's the answer? Which of the following accounts is depreciation of office machinery be transferred? It's an expense. So it will go away. Profit and loss. Correct. 31, sorry, we've done this as well. What's the answer?
1,000.
1,000, right? Working capital equals current assets minus current liabilities. So if working capital is 15,500 and current assets is 16,500, current liabilities has to be 1,000. Number 32 refers to the following balances. What is the working capital? Again, working capital is current assets minus current liabilities. What are the current assets here?
Cash,
Cash and
prepaid insurance.
the current liabilities would be the rent owing, the creditors, and the bank overdraft. So total current assets is 3,800. Total current liabilities would be 1,800. So 32 would be A. 3,800 minus 1,800 is equal to 2,000. Number 33. They want to know what amount to be charged to the provision for doubtful debts. So firstly, we only record the change in provision. The said provision is 2% of the receivables. Receivables is 25,000. 2% of 25,000 is 500. So it reduced by, if it was 700, it's now 500. So it reduced by 200. We only record the change in the provision. The only answer here that has the 200 is A. Number 34, an increase in bad debts. Bad debt is an expense. Expenses are subtracted to calculate the net profit. So if your expenses increase, your net profit will decrease. Number 35, the company rent account had an opening debit balance of 2,000. During the year, 6,000 was paid for rent. At the end of the year, there was a closing balance of 1,500 in the account. What is the rent expense for the year? So let's do a T account. So you're gonna start off with our balance. They said it was a debit balance, so we go on the debit side. So balance 2,000. And then they said 6,000 was paid for rent. Expenses are always debited. So we'll have cash 6,000. At the end of the year, the closing debit balance is 1,500. So if the balance brought down is on the debit side, where will the balance carried down be?
And credit card.
Credit side,
Credit
right?
side.
So the balance carried down will be 1,500 on the credit side. And the missing figure is what we record as the expense for the year. So that will be the balancing figure. 6,000 plus 2,000 is 8,000. 8,000 minus 1,500 will give us 6,500. Number 36. Miss M. Brown wishes to increase her provision for doubtful debt from 8% to 10%. Account receivable at the end of the year total 10,000, while the balance for provision for bad debts account is presently 800. What is the following entry? So it was 800, and now it is 10,000 by 10%. What's the answer?
So I think this one was D.
D, correct. So it's 1,000. So it went from 800 to 1,000. So it changed by 200. And you record the amount it changed by. Number 37. The balances of the asset accounts for Biro Club was as follows. And the accumulated fund is how much? So remember, there's like a capital account, right? It's assets minus liabilities. But in this case, it have no liabilities. So we just have to add up all the assets, right? So when you add up all, how much you'll get? Anybody?
9,897.
Thank you. Number 68. 38, sorry. A. Jones is by mistake debited C. Hall's account instead of F. Hall. So you put it in C. Hall on the debit side when it should be in F. Hall on the debit side. So to take it out to the debit side of C. Hall, what would you do?
Credit it.
Credit it. So you'll credit C. Hall, and then you'll have to debit F. Hall where it's supposed to be, right? So you would debit F. Hall and credit C. Hall. So the answer will be C. Number 39 and 40. We did number 39 already. What is the amount that represents number 1? Remember, both sides supposed to be equal. So this side is adding up to 6,000. This next side is supposed to add up to 6,000 as well. So how much does it need to add up to 6,000?
2000.
2,000. And what will be represented by 2? Assets is equal to liabilities plus what? Assets is equal to liabilities plus
Capital.
capital. So number 40, what represented by 2 would be capital. Last 20 questions. Number 41, how much was collected in subscriptions for the year? So let's take a look. Open a subscriptions account. The subscriptions is revenue, right? Revenue owing is an asset. Revenue prepaid is a liability. Revenue owing revenue owing is an asset. Assets have what kind of balance? Debit balance or credit balance? Anybody? Do assets have debit balances or credit balances?
Debit balance.
Debit balances, right? So subscriptions owing, which is a revenue, revenue owing, which is an asset, would have a debit balance. So that balance at the start of the year will go on the debit side, 450. Subscriptions owing at the end of the year is 150. If the balance brought down is on the debit side, the balance carried on will be where?
Credit side.
Credit side. Balance carried down, 450. Alright, so the amount that we received, right? The subscriptions that we received, revenue is always credited. The subscriptions collected would go on the credit side. Which is what we need to calculate. And the amount we are supposed to receive, which is what we're going to record in our income statement, will go on the debit side. Well, in our income and expenditure account, will go on the debit side. And that would be, is 50 members at $50 each. 50 by 50 is 2,500. So the figure that we're trying to calculate will be our balancing figure. Well, it's supposed to be 150, not 250, not 450. So the figure that missing is the balancing figure. 2,500 plus 450 is 2,950. 2,950 minus 150 would be 150. Would be 2,800, sorry. So the subscriptions collected will be 2,800. Number 41. Mr. Miguel's capital on the first was 40,000 and on the 31st 85,000. We know this answer. What's the answer?
Starting on 46.
How much? I didn't hear.
So 46.
46,000, right? Because we do this one before. You just need to know that formula. Opening capital, add net profit minus drawings equals closing capital. And just Use the algebra to get the answer. WXYZ, they want to know what is D's share of capital. They said they share it the same way as it's in proportion to their capital. And they want to know share profit, sorry. So again, I'm just gonna scratch off these zeros to make it easier. So it'll be 3 to 2 to 1 to 3. Z is 3. So it'll be 3 divided by, I'll add up all the numbers to get the denominator. 3 plus 2 plus 1 plus 3 is 9. 3 over 9 multiplied by the profits, 7,200. Which is the same as 3 over 9 is the same as a third. 1/3 of 7,200 is 2,400. Number 44. Which of the following accounts shows how profits and losses are shared among partners? What is the answer for this one?
Appropriation.
Appropriation account. Number 45. Mr. Smith does not keep proper records. He began his business with $10,000 in the bank. He used his vehicle and building with $6,000 and $15,000 respectively. As part of his business, we do this question already. What's the answer?
31,500.
31,500. They add up all the assets, minus your capital, minus your liabilities, and then minus your drawings. Number 46. Which of the following features is associated with a private limited company?
B.
Which one? B?
B.
Alright, shares are not sold publicly. Not they are family owned. Number 47. Capital at the start is 20,000 and at the end of the period is 22,500. Net profit is 6,500. So now they wanted to calculate drawings. So we know opening capital, add net profit, minus drawings equals closing capital. Opening capital is 20,000. Net profit is 6,500. We don't know how much drawings is, but minus drawings gives us closing capital of 22,500. 20,000 plus 6,500 is 26,500. 26,500 minus drawings gives you 22,500. How much is drawings?
4,000.
4,000.
4,000. Number 48. According to the Partnership Act, if there is no partnership deed, how should profits be shared?
An equal share.
In equal share. Number 49. We did this question. They want to know inventory at the end of the year. Opening inventory. Add purchases minus closing inventory equals cost of goods sold. Opening inventory is 1,500 plus purchases, which is 1,200. That gives you 2,700. 2,700 minus closing inventory. $2,700 minus closing inventory gives you a cost of goods sold of 1,400. So 2,700 minus what will give you 1,400?
1,000.
Alright. Number 50, which of the following items is not recorded in the appropriation account? Which one?
So joins.
Drawings. Interest on drawings is recorded, not drawings. Number 51. When a company declares a dividend of 15%, the dividend warranted on 1,500 $1 bills is how much? 1,500 $1 ordinary shares. 1,500 by $1 is $1,500. Multiplied by the 15% for the dividends is how much? 1,500 by 15% dividends is how much?
225.
225. That one repeats a few times. Number 52 refers to the following information. They want to know how much money should Jane receive as her share of profits. So we're going to take net profit. To get the profits to be shared is net profit. Add interest on drawings minus interest on capital minus salaries. Let's start off. Net profit is 23,500. We're going to add interest on drawings, which is 45 plus 15. Then we're going to minus interest on capital, which is 2,000 minus 1,000. Then we're going to minus salaries, which is minus 2,500. And that will give us 18,060. And they said, they want to know how much Jane gets. They said Jane and Mary's share the ratio of 3 to 2. Jane would be the 3, Mary would be the 2. So Jane would get 3 over 5. I get the 5 by adding the 3 and the 2 together. Multiply by 18,060. 3/5 by 18,060. And that will give you 10,836. 10,836. Number 53. We do PMOs already. What was the answer? Who remembers? Nobody? So the basic.
246.
Right, 246. The basic wages was 40 by 7, which was 280. Then you had to minus income tax, which was 20. And then you had to minus Social Security, which is 5% of 280. Which was 14. And that gave you the 246. Number 54. The maximum capital a company can raise is called what? Anybody? What do you call the most amount of
Authorized.
shares? The authorized share capital. Thank you. The issued capital is the amount you actually issue. Paid up capital is the amount you actually receive, just in case you ask. Number 55 refers to the following table of prospectus, and they want to know the total capital they get. We know this one was the answer.
450.
450,000. 200,000 by $2 is 400,000. 10,000 by $5 is 50,000. Number 56. Which of the following will result when opening inventory of raw materials is added to net purchases of raw materials? Opening inventory plus net purchases will give you what?
D.
Which one? D?
Yes, sir.
Correct. That gives you the cost of raw materials available for use. And when you minus the closing stock of raw materials, that will give you cost of raw materials used. Number 57 refers to the following data which pertains to Tarisha Ali, an employee of a bank. We did this one already. What is the answer for this one? Who remembers? This one they said 25%. The income tax is 25% of every dollar over 2,000 for the monthly salary. So every dollar over 2,000 would be 3,500 minus 2,000, which is 15. So we had to pay 25% on 1,500. 1,500 by 25% is how much? 375. And then they said 30% of overtime earned. So that'll be 800 overtime by 30%. 800 by 30%, which will be 240. And then we add both of them together to get the total. 375 plus 240 is 615. You almost finished. 58. Which of the following items is not considered a source document for payroll? Which one will not be considered a source document?
Medical certificate.
Medical certificate. Correct. Currently use that to track them. Number 59 refers to the following information. What is the balance as per bank statement? Number 59. So the balance as per bank statement is your revised cash book balance. Add unpresented checks minus late lodgements. Try and remember that formula. Cash book balance, add unpresented checks minus late lodgements will give you a bank statement balance. And if you need to calculate your cash book balance, you just start with the bank statement balance and work backwards. It would be add late lodgements and minus unpresented checks. But in this case, let's see 560, add unpresented checks of 120, that is 680, minus late lodgements of 150, that gives us 530. And the last one now, number 60, the net profit of a firm was shown as 1,600. It was later discovered that discount received was undercast by 10 and purchases was understated by 30. You all remember this question? Please.
Yes, sir.
All right.
1574.
1574. So that's over the net profit of 1,600. Discount received was undercast. We normally add discount received, so we didn't add enough. We're gonna add back the 10. And then we normally subtract purchases and we understated purchases, which means we didn't add enough. We didn't subtract enough purchases. So you gotta subtract more. That'll leave us with 1574. Okay. And that is it. That is the end. I really hope this was helpful. All these plastic all these paper ones. I really wanted to do more, but I felt like going through the questions in a little detail, especially the earlier ones, would have been more fruitful than just ramming down a whole set of paper ones. What do you all think? Does it help? You agree? All right. Remember, if new questions come, do not panic. Just apply your knowledge. Remember, it's new questions. It's going to be similar. It's going to be related to the things you would have done. So do not panic. All right?
Yes, sir.
All right. Well, this will bring us to an end. All the best.